such a massive revenue source. I mean,
On the Tesla side.
yeah. I mean, like that, because eventually that's the idea, right? Maybe, right? You see that the two, it's kind of been the general thinking is they will do that. I think that that's just a very strange element to me, just because I don't know how many people actually want that in their home. I'm sure there are people that like, dude, this is cool, but they're also like,
Interesting. It was higher when we started talking.
You can see 7,700 is a pretty big level.
Before earlier this year when Anthropic said, be careful if you're buying shares in Anthropic through certain SPV, special purpose. And then the Wall Street Journal had a story today saying some of the people who tried to buy into SpaceX using that found out they didn't actually have the shares. So there, and that also brings me to the point which our Jared Lucas is going to talk about later, is that retail investors keep pouring into this thing. So we're seeing the stock go down, but it's retail folks are getting back in.
And the only thing I would remind those retail investors, and someday we may be up over this, I'm not sounding great, but there are other companies, public companies with solid balance sheets that are profitable, who are doing a lot of the things that SpaceX is claiming that they are going to do, whether it's satellite technologies, rocket propulsion, not necessarily orbital data centers, but you look at Aerospace, GE Aerospace, you look at Lunar, you look at AeroVironment, there's other companies that can provide you with exposure to space if you want to hold SpaceX and you get more of a diversified.
I mean, I guess it depends on the time.
It's a good time in this time.
Yeah, for sure. Let's talk about the moment.
Hey, Goose.
There's a lot to say about this.
Good morning.
So, Wall Street Journal's out with a story. Wall Street Journal's out with a story saying that President Trump has been speaking regularly to Fed Chair Kevin Warsh. It's risky consistently, but like it'll come in bursts. Which seems to have to do with those.
Good morning.
Handling again, and the pressure that was.
Okay, where is my futures chart?
Sort of like backdoor easing, not on purpose, but backdoor monetary easing because of the mechanics of the way it's worked. Kevin, like, should we be worried about Fed independence?
If in fact the Fed is going to lose their independence, certainly we should be worried about that. What strikes me about Kevin Warsh, and I go back and forth, is he a fault in Doug's clothing? Is he a dove in false clothing? I hate to the Doug. But he does seem to be a reformer that stands on principles and does seem to want to change the manner in which the Fed operates.
All right, futures are down. We're down a point, so we're basically flat. We are flat.
And then I also think he's only
supported 7,700. S&P cash.
So I don't think they're going to lose their independence. You may continue to see political pressures as we have up to decades, but I think they're going to engage in maintaining their independence for the proper function.
Yeah, I mean, I know this is.
Let's get ready for the opening bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, August the 6th. Got about 14 minutes to go.
I think there's that. I also think that, like, Bessent sort of the MO of certainly the president and many others in this administration is to criticize the press if the press says something they don't like. It's never the press, no big deal. The American public, frankly, not a big fan of that tactic. Not really engaging on the merits of the story, but calling names doesn't seem a terribly productive way to address that. And also, by the way, that then raises questions about independence too. If Bessent
Mic check.
coming out in this way, but also trying to get the Fed involved in that yen intervention.
True, but I mean, Secretary of the Treasury and the chairman.
All right, let me boost the volume a little bit here.
Independent of one another.
They are independent, but they do collaborate. They have in the past, which is legitimate under certain circumstances.
Yeah.
All of that said, Kevin Warsh is gonna be speaking at Jackson.
Mic check, mic check.
Did he confirm he's going to speak at the meeting?
That's a great question. I assumed he was going to speak.
He doesn't like
at
the-
the-
anything.
All right, that sounds good.
That'd be interesting. We didn't hear anything about it.
That would be interesting, but I don't think the markets would like that very much.
I would like,
I don't think that
I
would.
like transparency, I really do. I don't think it's,
So here's another thing I would say quickly before we get to the last thing, which I know Dan has much more to say on. To me, the issue is not that there's no forward guidance. That's not-
Okay, what's Apple doing? Apple was up last night.
Nothing. Isn't that the problem?
it's very important for us.
Okay, Apple's up pre-market.
to interpret data so we can factor in what they may do in the future. I understand when Kevin Warsh says we're the referee, you should be looking to the players. The Federal Reserve is another player.
Yeah.
They can have a major.
We closed over here.
What they do with interest rates. So removing any type of guidance, Julie, I've.
Closed right here.
Were we getting too much? Probably. Were we getting?
Okay, looks pretty good. Pre-market, we're over here.
Probably. But that doesn't.
Pre-market.
Everything, right?
Yeah, I think so. Okay, well, finally, getting back to tech. It's interesting some of the news flow that's come out over the past day that sort of raises questions again.
313, trying to get above 314, 315 would be good today.
The news crossed that Dennis Hassabis was going to transition to a new role at DeepMind at Google.
10 minutes, 30 seconds to go.
Dean was going to be leaving as the chief scientist. Hassabis is now. Am I saying
All right, let's look at a few things. I've just been scanning through stocks to see how they're doing.
Like just the shake up there. Very interesting that is happening.
Not a good look for Google, especially, or Apple, whatever.
Yeah.
Uh,
All right, these are scams.
You've seen reporting.
20, 50-day cross. Budweiser looked pretty good. Trending. Let's see what it looks like on the weekly. Yeah, Budweiser is trending.
What's going on with, I guess, Opus 5 at Anthropic and 5.6 over OpenAI. So losing these people, chief scientists, seeing Dennis move up into the chairman role, it doesn't feel as though
5 below.
at a time where
Okay, that looks pretty good. Trending. Retail.
Right, alarm bells going off to leading in AI to now starting to fall back a little bit. And it's not as though they're in danger of losing, any kind of parity or they've lost parity.
Noodles and Company. Not familiar with them.
It's kind of a
NVIDIA growth and income.
sense of what's going on.
ETF.
Google, there's issues with capacity, there's infighting over who can get access to capacity to use for their different needs for research, for powering models, training models, for running, customer services.
Occidental
You have this,
Petroleum.
there's too much going on at a company where.
Okay,
you
that's
feel
good. Let's take a look at the watch list for the
where you
week.
feel that this should be, they developed.
Watch list, a lot of the stocks moved higher.
They should be
They should be
in the leaders.
And it's against this backdrop that they're.
Okay, got Apple, which is above the 50-day now. That's important. Intermediate term fair value. All right, we're starting to climb. Short-term fair value is up here at 325, the 20-day moving average. We're trying to get through 315 right now, 314, 315. Apple pre-market, 314, 315. Okay, looks good. Looks good. If you're swinging it. Okay, this is Bank of America. The banks look good yesterday. Reminder, the banks are trending. CBRS, watching for a bounce. CrowdStrike at highs, double top. Okay, Bank of America, you didn't see that. Bank of America trending. Okay. CrowdStrike, double top. Dell trying to break out. Watch Dell. RSI is above 50. MACD stochastics are okay. Momentum is bullish. We need to see more volume. Yesterday we had a lack of volume. Emerson, they had earnings, right? Emerson.
For the Bloomberg report that they looked at filings and they sort of did the math and they said of that Microsoft AI revenue that they just revealed to us, if you extract.
Okay, let's just take a look at that. Emerson Electric, they had earnings.
Microsoft wants it, right? They've been trying to diversify, but again, it's just like, and sort of.
Okay, so their earnings growth 12.5%. That's good, 7%. We'd like to see all four of these green, but this is flat, so it's a good trend.
Yeah, I think you have to be very patient with the hyperscalers to recognize that this is a long-term play. Some of them are.
That looks good. Emerson. All right, so that might be a good one. Emerson. Daily, let's see, the weekly. Weekly's breaking out. Okay, Emerson. Dell. Dexcom. Emerson. Google. They're still talking about Google right now, losing their chief scientist. IBM, looking good. IBM's a good one. Okay, I'm going to just write these down. Emerson.
What's going forward is OpenAI.
Bank of America. IBM.
Microsoft has been wrapped up with OpenAI. And to your point, they're trying to.
JD.com, Consolidating. JP Morgan, looks good. Banks, trending. We got 6 minutes to go. Just under 6 minutes to go. MDT still trending and taking forever. Meta stopped at the 50-day. We'll look for Meta to continue. Microsoft consolidating. We'll have to keep an eye on Microsoft today. Let's see what that looks like. Pre-market. Okay, Microsoft is flat. NVIDIA looks okay. Let's see what NVIDIA looks like. Okay, NVIDIA. Come on. Come on, Vinny. What's going on here? NVIDIA. Okay, NVIDIA is higher. What do I have in NVIDIA? I have NVIDIA. August 14th. That's next Friday, right? Okay, looks good. 220, 225, 225, 227, 50s. Okay, so I have some positions. And NVIDIA. Netflix looks good. Netflix. Just talking to myself, sorry. Netflix trying to continue. It broke out yesterday. Netflix broke out yesterday above these pivots, recent pivots. So moving to the next level. Okay, pre-market, we're right here. Netflix. Okay, back to this here. Watch list. NVIDIA. Ship finance, those are pulling back a bit. SPY value breaking out to new highs. SPY value. You got SPY value, SPY growth. Two good ETFs to trade if you want to get in on swings. AT&T looking for the bounce. The shippers, maritime shippers pulling back. Verizon looking for the bounce. And Walmart. Okay, those look pretty good.
With the Honeylove crossover bra, you can live your best life lifted and supported in a bra that comfortably stretches and moves when you do. No spillage, no bulging. With the Honeylove crossover bra.
Healthcare yesterday. Materials, consumer discretionary, financials. Okay, so watch the banks.
No digging.
Okay, we got 3 minutes to go. 3 minutes to go. I'm going to put on a pot of coffee. I haven't had coffee in a few weeks. Okay, I'll be right back.
Unique subscription plans to choose from and zero commitment. Boomsbox makes any day a gift worth something. Save on your first subscription order today at boomsbox.com.
Esther Moxton comes standard with advanced eye active sense safety features. It's one of the reasons why Mazda is the safest new car brand. And a safer car lets you focus on what matters most.
Take advantage of this exceptional offer at each month. This game drives you. Is it the early morning radio stations? Is it the freshly brewed coffee, the walk through the morning dew, the cruise around the fairways? When the sun goes down, all you can think about is that perfect drive, the missed putt, the pure iron shot, all of it, only for the sun to rise and do it all again. No matter who you are, the just chasing game.
Okay, well, that was fast. We are open. Let's just check, see how we're doing here. Netflix pushing a bit higher. Apple breaking out. Apple breaking out. Okay, looking good, Apple. Okay, Apple, November positions. Okay, so Apple, I can afford to sit on this one for a few. Microsoft trying to turn. Got Snowflake pushing up. The New York Fangs are basically mixed. Netflix is trying to move. Sorry, here's Apple. Here's Apple. Okay, here's a pre-market high starting to print. Pull this over here. Pre-market high on Apple. Looks like the opening range high for now. Okay, pre-market high significance is that we want prices to break above what it was trading pre-market. Volume was pretty decent pre-market. There you go. And we want volume and price action to stay above the pre-market. We want to close up here to take a long. Okay, S&P watching the futures. Let's see, Adobe is up. Adobe's up. Nike is up. What's SpaceX doing? SpaceX continues to look weak. SpaceX What are the options going for? You guys buy, some of you bought Friday options for the lockout today, SPCX. Let's see how those are doing. Are they up? They're up quite a bit, the puts. Adobe. I wouldn't be surprised if Elon gave people incentive to not sell employees in private meetings. Be hard to believe that a private meeting somebody wouldn't talk. Okay, KDP, Keurig Dr. Pepper is number 1 on the NASDAQ. Keurig Dr. Pepper. Okay, watching Apple here. Watching Apple. Okay, so far we're looking a little overbought. Futures fading a bit already. Futures. Okay, Dell. That gap down. NBIS, Marvell, Palo Alto, HPE. Futures look a little dicey at the moment. Let's take a look at Trace. Okay. 0-day. See where the big nodes are. Okay, we got higher volatility overhead. We got purple down below. So we do have positive gamma to support price action, keep things a little bit more stable. Okay, NVIDIA's on the move right now. NVIDIA. Okay, let's keep an eye on these. NVIDIA. Okay, that was a little slow there. Let me just read. NVIDIA. All right, looking pretty good here, NVIDIA. NVIDIA on the move. Okay, here goes NVIDIA. All right, we're above the pre-market high. We're watching volume here. If this candle closes above, look for a follow through.
Second part of my question, Bruce, you mentioned.
All right, this candle closes above the pre-market high on a burst in volume. Look for a follow through and a trend continuation today. Apple's already starting to fade a little bit. Profit taking in Apple.
Obviously, if you look at the relative stock performance between all the hyperscalers, Alphabet has been by far the strongest. And at the end of the day, you're still talking despite all the free capital that they're spending.
Okay, New York Fang looks okay.
So I think it will be well received. I think the problem for the bond markets is that you just know so much supply is coming.
Okay, Nvidia is up almost 2% already. Disney. So Disney is allowing content on TikTok, and they're allowing short-term videos to be produced. They're kind of getting with the times, I guess you'd say. A lot of people on TikTok making short-form video. Well, Disney, I guess, management decided it's a good thing. And not the only reason, but a lot of things are adding to Disney's potential. Looks pretty good here. Disney breaking out. Disney worth a shot.
I think it worked both ways. I think there are people that would do both. I think it would work the trader type mentality certainly want to jump into the stock because there's more excitement there in terms of trading it. But as a long-term time investment, it's looking for stable, solid yield. Certainly the fixed income.
Okay, NVIDIA looking really strong here. NVIDIA. Okay, we got to close above this level. Let's see if we can follow through.
I do agree with that. I think the man said it has to work. And to his point, for the first half of the year, it really did nothing in it. So people get, frustrated with it and they sold out of it. All you need to do is miss 1 or 2 days. You're going to miss the whole thing.
Okay, Keurig Dr. Pepper's number one. Slipped from number one. DoorDash is number one now on the S&P. And NASDAQ. DoorDash.
Yes, I think you have to be in those days.
Okay, DoorDash. T-Mobile. T-Mobile popped. T-Mobile popped. So that means we'll look at AT&T. AT&T gapping up. And Verizon. Okay, these are popping up. Verizon fading at the moment from a gap up. Thomson Reuters, that's been on the move lately. Thomson Reuters, if you've been paying attention. Yesterday had a big down day, bearish engulfing right at the 200-day moving average. We'll see if it gets going. It's in the top 10 on the NASDAQ. Take two. I heard EA, they were commenting about EA this morning. That's the wrong EA. EA Electronic Arts.
Nothing crazy. So as far as the risk that we're looking at,
Why is it not finding it?
6 months. If inflation does pick up a bit, oil sustained over 100, then absolutely rates become a problem. But in the near term,
did they get bought out? Did Electronic Arts get bought out? Huh. Interesting. NVIDIA though. NVIDIA's on the move. Okay, Microsoft is on the move as well. Microsoft inside day for now. It's above its pre-market high. Microsoft. Broadcom, looking for the bounce. Broadcom, NVIDIA, looking good. Okay, what are the semiconductors doing? SOXL. Bouncing thanks to NVIDIA. And what other semiconductors do we have? NASDAQ. Actually, NVIDIA is the only one in the top 10. NVIDIA, only top 10 stock with semiconductors. Okay, it's climbing the list. NVIDIA.
These CEOs drive capital investment and therefore long-term returns. They control hiring in this country, which still is going well. So what we're hearing from them is we're in a low fire environment. They're not big plans.
Okay.
Lots of people, lots of investment still in AI, and there's your market reaction. Most of the Mag 7 AI stocks have corrected, but you have all of that investment going on. But in terms of long-term capital investment, for capacity and other things, they're still sitting on the sidelines. Your borrowing costs are quite high. We talked about that. And they don't want to lock into bad returns on capital projects and so forth. But look, sitting in neutral.
Okay, SOXL looks good. NVIDIA. Okay, watching for NVIDIA to follow through. Microsoft looks good. Watch Microsoft. Okay, Microsoft. Okay, Microsoft flagging up here at the high. Consolidating would be a good thing. It could pull back, but if it stays up here, that would be a good thing, obviously. S&P 500.
So what has to happen
Okay, we could stay up here. We've got positive gamma down below, so 7,700 is support right along this area. If we look at trace, okay, look at non-zero day, and look at net open interest.
About 6,000 consumer products just in this country that are impacted by the price of oil.
Okay, 7,700, 0 day right there. You can see pretty decent support there. We're above it at the moment.
So it's not just the gas pump, which of course is very visible.
Okay, we'll see how the market develops. Right now, we got a nice little gap up on NVIDIA. It's already starting to see some profit taking, people getting nervous. Any news on NVIDIA worth mentioning?
Confidence in the new Fed chair, CEOs have experience with him.
NVIDIA making, Kathy Wood's making a bet, 17.6 million bet on what stock?
So I think they understand him and they don't.
80,000 shares worth about 17.6 million across multiple ETFs.
He's been very vocal. The market needs to assess risk and not.
Okay, so Kathy Wood's buying NVIDIA. I'm fine with that. A lot of people don't like her. I personally think she's just fine, you know. Hasn't had the best track record lately, but she knows what she's doing.
Take a listen. I'll look at your reaction.
We think this is a fundamental shift. We think that there will eventually be billions of agents providing work and labor, and they'll be able to be orchestrated and integrated within a firm and across firm boundaries. We want our employees to have.
Okay, Netflix pulling back. It had a nice little pop pre-market.
To amplify their own capabilities. So this is an opportunity to multiply the capabilities of a firm and of humans themselves.
All right, New York Fang flagging, double top for now, double top.
Headed into a high fire backdrop next year. No, I don't think so. This is what we're hearing from most CEOs too. The implementation of AI is not about killing jobs. That was the fear, of course, and we heard that. And you do hear that in a few cases where there is.
Okay, RSI is sideways to slightly lower. Momentum is still bullish. It's the bulls to lose. Right now we're showing stochastics turning down. Okay, we want that to turn back up. Looks okay though. If we get a few more stocks participating like Amazon and Google. Google down on a big hit yesterday. Bearish engulfing, losing its top scientist. All right, no big deal there, huh? Looks like we'll bounce at the 50-day. Is Google one person? I doubt it. I don't think Google is one person. Okay, stocks that were showing up on scans, Borg Warner. They're big into auto and light truck transmissions and associated rear axles, stuff like that. So let's see. We'll come back to that in a minute. Xena, there was some talk about Xenatech. Nice follow through past couple of days. Xena, CPER, copper, Budweiser. Personally, I don't drink Budweiser, but that showed up on a scan. Budweiser 5 below has been trending. Let's see what that looks like. All right, S&P is on the move. So we'll come back to these in a few minutes. S&P is on the move. Okay, we got positive gamma below, so that's supportive. Supportive. All right, S&P looks good. NVIDIA, sorry. NVIDIA. Let me get back to NVIDIA. Trying to hold on to these levels, NVIDIA. Okay, so we're above the pre-market high. We're closed up here. We want to see volume pick up now. Opening range high will be over here, it looks like so far. Pre-market high. Let's grab that. Here's the pre-market high right there. We want to stay above the pre-market high. Okay, we want to stay above that high. Opening range is right there for now. Opening range high right there. All these are a barometer referencing relative strength and whether or not the stock is in play. The stock in play will stay above its pre-market high most of the time. It'll take out the opening range high on volume. We'll get an opening range breakout signal. Looks like we're going to get it right now. Technically, we're still inside the opening range. S&P is still on the move, looking good. Oh, I got to go get my coffee. I'll be right back. Let me get my coffee.
Collection. With AI information, faster model, access, plus AI motion capture, do it all with one powerful subscription from Indices. Just a shy of GXO effort stock. The company called out a lot of different things. GXO logistics, yeah, but you see it. Did you see it? Look, I mentioned stock. Street. Get wrong, today. Who's really surprised? Street misread the story. You are someone. Stay and those 5 years, we have been on our strategy. This is $13 billion. 26 countries, 150,000 people, diversified across many industry verticals. And since I joined a year ago, 32 years experience in this organization, returning to organic growth. I think what we saw yesterday in the election is an underappreciation of the potential of organic growth. We participated in industry contract logistics. It's a $1 trillion marketplace, less than 30% penetration. Space. I thought yesterday when we announced Q2 new business signings of $410 million in US revenue, up 35% from last year. I thought that was a great signal that our strategy around driving growth is working. Signal that we have experienced the same increase in sales year over year.
All right. NVIDIA is still trying to go. All right, Microsoft looking pretty good here too. Microsoft performing. Yeah, it looks pretty good. Microsoft. All right, Microsoft looking good here. Microsoft going. Okay, Apple looking good too. All right, so all of these are looking good. Microsoft looking like it wants to just keep going. Nice move on Microsoft. Should I take some off of Microsoft? I have in the money here. Should I take it off? Okay, Broadcom. Broadcom turning back up. That looks good. Broadcom above the 50-day is what we're looking for. Now that it's above the 50-day, we're looking for higher highs and higher lows. Broadcom, Nvidia. Okay, Apple. Okay, Apple, thank you. Apple. Okay, opening range high is way up there. S&P at the highs. We got positive gamma below. Positive gamma, so we should be supportive. Okay, let's see what Core 1M is doing. Core 1M. 7. Okay, Core 1M just moved above 7, so we're moving in the right direction. Okay, some of you bought Fastly recently. Fastly, that had earnings. Fastly, FSLY, Fastly. Oops, yeah, wrong keyboard. Fastly, gapping down. All right, so we'll come back and look at that. All right, Apple looking good here. Apple. Okay, Apple's looking good, folks. All right, so we got the New York Fangs all starting to perform, except for Netflix at the moment. Netflix pulling back. Tesla bounced. All right, so we might get a decent day out of the New York Fang components. Okay, so far we got buyers under the low of the day. This is either going to be a double top or a breakout. Okay, so I'm voting for a breakout. The reason I'm voting for a breakout is this. Okay, the markets do two things. Okay, they're always doing two things. They're either trending or they're consolidating, right? So we are at a double top, so this is an important area. If we break out, I would anticipate a trend continuing. Now, why would I think a trend could continue? Number one is the S&P 500, okay? So S&P 500 on a weekly time frame, we just completed a 12-week consolidation. We're above the 10 EMA. The 10 EMA is tilted up and to the right. So I give the bias to the bulls, even though it's August and we're going into midterms. The bias right now is bullish. It's the bulls to lose, basically. All right, Apple. All right, opening range high keeps pushing a bit more. All right, we got 4 minutes to go for the opening range. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, August the 6th. Coming into the opening range high, significant as far as the strategy is concerned. Once the opening range is complete, we can look at stocks that are breaking out above the opening range high that remain above the pre-market high in most cases. If they're doing it on volume, the only way that's going to happen is if the stock is in play. So it basically gives you a heads up. Relative volume has to be high, so you check your relative volume. Okay, so staying above the pre-market high, as you can see, is good for Apple. A move above the opening range high after 10 o'clock. We're looking for opening range breakout signals. That'll be a breakout on higher volume. Compared to the first 30 minutes of the trading day, average volume, we want to see a volume spike of 1.5 times that average.
Booked. Ugh, that almost made me happy.
You've got options.
That's funny. It was just a commercial. It was just a commercial. some Gen Z person with a nose ring and purple hair. I hate being happy. It's so funny. I don't know. It's funny to me. If you have a Gen Z child. All right, Apple, not following through yet. Okay, so let's take a look at the rest of these, like Nvidia. Are they sucking people in? Is this a fake? Is this a fake break higher? We have to wait a little bit longer. Let's see. Meta's starting to move here. Meta. Okay, so we're shifting over to Meta. Meta trying to break higher. Pre-market high is overhead. The reason why pre-market is important, obviously, is because news will come out and we'll see price action moving higher than yesterday. You'll put in that pre-market high, and then the regular trading session, we hit the open. And if we're above the pre-market high, that's significant in that, that news is inciting more buying. So it's more in play. That makes sense for your new traders. For your older traders, you're just probably your eyes are rolling in your head right now. But we do have new members. People have just joined us. I have questions occasionally that can help them with their trading career. Okay. So one thing is what's happening in the pre-market. Where does price open relative to the pre-market? And then what does it do after that, after 10 o'clock? Does it keep going? Do we have a higher volume than the pre-market the first 30 minutes opening range? All of these things are questions we want to answer. Okay, so let's look at what's moving right now. Okay, we got Microsoft up 1.5%, not enough to break out. Disney changing some of the things that they do, allowing content on TikTok and short-term videos, taking their product, Disney's product, and making short-term videos. I'm surprised NVIDIA is getting with the program. Everybody seems to be using TikTok. Apple, gap up. Merck, the pharmaceuticals look good. The banks were very strong so far this week. Let's look at the S&P 500. Any banks on here? No, but First Solar's on there. First Solar, Boston Scientific. That looks good. Boston Scientific is trending. Coming out of a squeeze. Let's look at let's zoom out a little bit. Zoom out. Yeah, it's changing trends. Boston Scientific, trend change. BSX. Boston Scientific. Okay, that looks good. All you need is one or two of these a day, right? To make your trading week, trading day. Boston Scientific. Okay, so other stocks. Disney, Apple, Chevron, Procter & Gamble. A lot of stocks are just kind of sitting tight right now. Walmart, fading from the high. Coca-Cola. Occidental Petroleum. Ralph Lauren. Ralph Lauren coming out of a squeeze. Oh, shit. My wife and mother-in-law arguing. They calling each other suka. Suka, that means bitch in Russian. Oh, man. Always exciting. Netflix still pulling back. All right, Microsoft's still hanging in there. Microsoft at the highs. Feels like a rubber band that's extended a bit. So maybe sell some covered calls up here, or sell call premium, bear call spreads. Maybe sell something up there. I've already done that once in the last week. I had to take them off on Friday last week for earnings because it was too strong. Microsoft was way too strong. All right. Microsoft was way too strong. I wind up selling these or taking them off for a loss. Way, way stronger than anybody anticipated. Okay, these 18 deltas I sold, what was it, Thursday last week? Tuesday, no, Wednesday. Wednesday, Thursday, the stock continued. Gapped up on Monday. CYKA.
We've been talking to you throughout this whole process, before the company came public. So you're a shareholder, you guys selling any of your shares today? Is there any nice trinket you can talk about? Today is the day you get to cash out and buy that thing.
Yeah, so, look,
Yeah, Suka. Oh, a little thunderstorm, huh? All right, so Microsoft is really strong today, showing a lot of strength coming up here. Probably the high of the day for now. It doesn't feel like we're going to continue higher. Okay, let's look at the stocks that are following through, like Light. Okay, we're up to the pre-market high. Is there any news? We got earnings. Okay, so we got earnings next week on Tuesday. Opening range breakout already. Lumentum Holdings. LITE. T-Mobile. T-Mobile had a nice pop. That's back down to the pre-market high. So you can see how these stocks, if you're looking to buy something to make a profit, obviously we're always looking for a profit. What is your strategy, right? You can see how if we pull back from the opening range high, you should just move on for the time being. Let's see if it comes back to VWAP and bounces, or if it bounces here, a higher low. If we break out, that would be important as well. Institutions have been buying for the previous 4 trading days, not including today. Previous 4 trading days, institutions fell all over themselves along with the shorts covering. So that's important to acknowledge. ALAB. Okay, here's the pre-market high, the purple. Here's the opening range high. Looking for an opening range breakout. ALAB. Astera Labs. Wasn't there some... It was a good report, wasn't it? Yeah, Astera Labs beating by 31 million. 31 million. Imagine beating by 31 million or 10 billion. Some of these companies are just crazy money makers. Okay, Snowflake looks like it wants to go. Snowflake above its pre-market high. Any news on Snowflake? Nothing new. Okay. Broadcom, the chips look okay. I have some SOXL I have to unload. That expires soon. Okay, so I just saw Mondo mention IWM. So let's take a look at the 10-year yield. If the 10-year is fading again, that would be good for IWM. All right, the 10-year yield survey says it's a bounce, but it's right in the middle of the Bollinger Band, so it's trying to make up its mind. Junk bonds. These traders are just kind of sitting here. A little bit of activity, but nothing enough to push us above the 50-day, like over here in May, the last couple of weeks of May. So we want junk bonds to be moving higher. We want advanced decline. We want advanced decline to be turning up. Okay, so nothing's turning up right now. So it's telling us to keep an eye on the opening range, but don't bite with too big a bite. If you're going to go long, maybe you do quarter size. If you're going to do 1,000 shares, maybe you do 200. Maybe you do 100 instead of just jumping in feet first. Because right now the market's just sitting here. Trace. We got negative gamma overhead. What that's telling you is that if prices start to move, we could accelerate quickly. Okay. So here's 0-day. Okay, anything new on 0-day? Let's see, in the last half an hour. Let's see, 0-day. No, not really. All right, so we got support here at 77.25. Any 99 percentiles? We got a 99 percentile negative gamma strike at 7,700. We know about that. Okay, Broadcom is starting to take out the opening range high. Broadcom looking for an opening range breakout. We got an opening range breakout on Broadcom. Okay, we got long, got back in. AVGO got back in on Tuesday. Opening range breakout. Opening range breakout right here. Okay, opening range breakout, volume 1.5 times the previous average volume. So you take the average volume, basically this. Okay, that's your average volume, okay, more or less. Just for the sake of argument. And then this volume bar right here. Okay, this volume bar right here is 1.5 times the previous average volume. So that tells you, that gives you an opening range breakout. This is the script that generates all of this. Okay, this is the script. So all of these things need to trigger. It draws a horizontal line and gives us a symbol for the breakout. All right, so this looks good. Opening range breakout on Broadcom. So far, so good. All right, we want NVIDIA to bounce too. I love thunderstorms. I just don't like tornadoes, and they usually come with, but I love thunderstorms. Rain, lightning. All right, so all you need is one good trade a day. All right, so I've been busy trying to reduce my exposure because I have too many open positions. Most of them are out in time. I would suggest if you're going to buy options, let's say you're new to trading options. Number one, calls are very expensive right now because core 1M is still below 1. Okay, so core 1M below 8 rather. It's below 8. So whenever a core 1M is below 8, you know the calls are expensive relative to the indices. That's all it's telling you. So you know a lot of people are chasing. That just means it's an extra risk. So when there's extra risk, you want to make sure, if you're an options trader, you want to be buying September. In my opinion, you should be buying September. I don't know your situation, but that's what I would be looking at. Now, if you're going to buy short-term options, you have a higher risk of failure, of course. If you're buying tomorrow's expiration, I mean, you could get a nice scalp here. You just got to keep an eye on it, right? Oops. So Broadcom's on the move right now. Broadcom on the move.
Right? So there are limitations to being purely.
Note the October 410s.
Going to launch the operational satellite on the first operational flight starts at.
Okay, another question, how much do you pay for that versus a conventional telecom?
It's very comparable.
Yeah.
But like the opportunity here is not just in consumer. It's
Okay, it looks good.
It's direct to cell or direct from satellites to a tower that they have reimagined and re-architected in a new way. And basically providing you connectivity wherever you are, so you don't have to think about how many bars you have. And then the big picture is how the massive growth in connectivity, when you start to think about humanoid robotics coming online, you think about autonomous vehicles, but all of the bandwidth and connectivity that these robots and machines are going to need. It's way more than the current market today. So they're building the infrastructure to be a major player in this market that is massively growing. And this is just one of several markets playing.
Okay, opening range breakout on Broadcom. Microsoft looking good. Apple rolling over. Apple no follow through. Broadcom looking good. Broadcom.
And I'll say what's important to you is important to us. And right now, what's important to Blake is not getting in trouble with his dad. The good news is if you have accident forgiveness from Allstate, your auto rate won't go up just because of an accident. You're in good hands with Allstate.
Okay, let's see if those October 410s are still there. Dollar. Okay. Broadcom. Longer term swing. We got back into this on Tuesday. Okay, I have September. And 430, 440s. So I'm looking for 440 would be maximum profit. All right, let's zoom out a little bit here. Let's take a look at Broadcom. Okay, so we're gonna move into the gap soon. Okay, gap. Not gap.
Your first order, discipline.com.
Okay, looking really good.
Indices brings bold polos, fashionable hats, performance golf gear, for players who do things their own.
Any news on Broadcom? No. Record revenue though. Record revenue. Okay, looks good. Opening range breakout for day traders. Watch how we deal with the highs here. All right. Broadcom looks good. Microsoft still hanging in there, watching for a bounce in NVIDIA. Apple pulling back. Intel is on the move. Intel looks good. Watch Intel. Intel's going here too. Watch Intel.
From the lows to there. Thanks so much for being with us here. You know, you did have 48% revenue growth last quarter, which is the best in bit. So, do you see you all as sort of turning a corner? And I know last quarter building on that momentum. Do you think that this is the pivot that some investors have been doing.
Yeah, really good to be here, Julie. Thanks for having me. Yeah, I'm really proud of the way the team executed. It was a strong quarter across the board. Companies are coming to Figma to reimagine how they're building with AI, and they're doubling down. So
Broadcom still going here. Broadcom.
We put up 48% in the quarter, the first full quarter of the AI credit monetization. And so this gives us a sense of where things are going and the opportunity ahead. And the dollar retention felt strong at 136%. One of the things that was personally really proud of is the gross profit dollar acceleration of 40%. And this is because everything that's going on and never been more important for folks, started becoming combined for value.
Okay, we got Rocket Labs on the move. Rocket Labs. Last couple of days, Rocket Labs have been rallying. Okay, Rocket Labs.
I do want to get more into sort of product and what you're trying about, but just to linger on the numbers for just a moment. So your third quarter forecast at the midpoint is $374 million. So that would be about $4 million higher than this current quarter. It seems as though that's what some analysts are zeroing in on. That basically they're calling it sort of deceleration of growth on a sequential basis here. So do you see that? Do you think that assessment is correct, sort of a slowing down of growth as the year goes on?
Yeah, maybe it takes us back to our guidance philosophy. We want to be really, really clear with investors what we know and what we don't know, and for the things that we have a high degree of confidence in, we'll take credit for it in the gap. And there's a number of new things that we rolled out, even over the past couple of months here, that are very materially growing the overall amount of credit consumption on the platform. We rolled out agents, which are these agents which sit side by side with you in your design file and can help you move more deeply within a full range of different workflows. We brought code layers onto the canvas as well, which allows you to between different modalities, all on the same surface. I think as we start to move those products that today are sitting in beta and early access programs into opportunities that are actually GA and drawing down full credits, we'll be able to have more confidence, be able to create that over time. And then we're also giving ourselves some opportunity here to experiment with pricing and packaging. We think that the market is moving really quickly. Our AI offerings are still new to the market, but we want to give ourselves some opportunity to learn and make sure that we're building the right things for the customers over the long term.
And this was the first quarter, the first full quarter that you were charging for some of these AI features that you're talking about. So was the revenue mostly conversions from people who were maybe using those features in beta or free version who are not paying for them? Is it new users signing on? Is it people adding those AI features? How is that all?
Okay. All right. So it looks like we're going to have a good day on Broadcom. Microsoft breaking higher too. Microsoft again. Microsoft going.
Really consistent with what we've seen in prior quarters as well. Gross dollar retention for that same
SoundHound, huh? I like the stock. SoundHound. Okay, nice. It's gapping up and fading. Let's see. 7.
Changing the way that that's what.
Right now, I think so we want to give folks the ability to try and excitement and
Okay, Broadcom, Rocket Labs, Broadcom, AVGO, Broadcom, AVGO. Broadcom starting to fade a bit.
This is the only thing that portfolio what stuff, but no one ever talked about it. To make long story short,
SpaceX. Nice reversal on SpaceX. Watch out. Watch out. Good trade there.
If you'd like to learn more about why this also see the complete guide. This is valuable information, including facts you should know. Just simple, silver, flat. Well, now we will also receive the global forecast special reports. Inside, you'll find the real issues and how you can start. Also receive protection for the risks. U.S. money reserve can walk you through the 3 simple steps. Precious metals on physical gold. We have used all U.S. money. Gold authority. Get your free gold kit information, including 3 simple steps to transfer existing gold. 3B with more than 2 decades in business, over $3 billion in transactions, and more than 1 million clients worldwide. U.S. Money Reserve is one of the most effective.
Okay, so SpaceX is on the move. Rocket Labs looks good. Broadcom starting to see a little profit taking. ARM Holdings. Let's see, Tesla, Amazon. Broadcom. Okay, Broadcom. Flagging at the highs, Broadcom. Okay, Broadcom coming in a little bit. it does tend to have a little bit of internal intraday volatility, Broadcom, so just keep that in mind. Rocket Labs at the highs. I wouldn't buy it here. I'd wait for a dip like we're getting in Broadcom. If you missed Broadcom, this would be a good dip to buy, provided we can continue. Provided we can continue with this. Okay, that's Broadcom. Let's see what else is working here. S&P pulling back a little bit. S&P. Hedge flows turning down. Remember, hedge flows trended all morning yesterday into lunchtime. We did close off the recent all-time highs. We did buy some. I did buy some put flies. Okay, so whenever you buy put flies, you want to be doing it on a bounce, not at the low. You'll pay up at the low, right? So if we do ease down into this 760, between 760 and 750, these put flies will insulate quite a bit. These expire next week. Maximum profit here would be close to $10,000 for 10 of these. They were $70 yesterday. I imagine you can get them for a little cheaper now. SpaceX. Okay, nice little move in SpaceX. Maybe some SpaceX calls for next year. Leaps. Let's see if anybody's buying Leaps on SpaceX. March. Today is the lockout expires, so everybody's expecting depressed prices. Okay, we're starting to fade now. S&P is starting to fade. You could probably pick these up still at a decent price, these put flies over here. I'd like to buy them up here, though, at the high of the day, not at the low of the day. Just me personally. Calls are expensive.
The little one, the big one, we saw Bag 7 lead, we saw chip stocks lead, and they fell up a little bit Wednesday, but it looks like they're trying to buy the dip. Traders are trying to buy the dip again today. So put it back all in perspective. Yes, this is a stock that has been beaten down, and there's a lot of shares coming online today. I'm more concerned about the longer term picture from two.
All right, SoFi is up again today. Broadcom is up.
Going to go up to about 5.5 billion.
Apple.
Into the end of the year.
Apple's starting to turn. Microsoft looking better.
Nevertheless, it'd be really interesting to track whether retail traders finally keep buying.
Okay, what's Oracle doing? Oracle had turned. We're looking for this to continue building higher highs, higher lows. That looks pretty good. Opening range breakout, Oracle.
Just talking about this renewed enthusiasm for some retail favorites, some momentum stocks. AI has been one of them here and there, although the stock is down this year.
ARM Holdings looks good. ARM Holdings. Opening range breakout.
5% to just under 62 million.
Daily looks good.
Smaller than analysts have been anticipating here. And our friend Kelly Lurie over at D.A. Davidson said the revenue was well ahead of expectations here. It looks like the company is got
ARM Holdings looks good. You got a target overhead.
Constellation Energy. Now these shares are up 14% today, bouncing after the company also came out with earnings that were well ahead of what analysts have been anticipating. It also raised its forecast for earnings per share for the full year by 50 cents. It's a range now of 11.50 to 12.50 a share. Analysts pointing to the gains that, from its acquisition of Calpine, which is a big, natural gas generation company, that helped the company's bottom line. And so, we see those shares, not much more now, just a little bit at this point in time. But if you take a look, on our Alpha-based platform here and look at how these Constellation Energy shares have been performing, right now, they're up by about 2% in today's session. They've underperformed this year. They're down by some 24%. If you look at them versus the,
Snowflake trying to push higher. Snowflake opening range. It's breaking out, but it's not on above average volume. They had a lot of volume at the open.
increase that we've seen in electricity prices and some questions around that is going to have on these stocks. That could potentially be a reason here, for what's been going on. So we'll continue to watch that effect. And then also
S&P continues to fade a bit.
is the energy drink maker. Those shares are down sharply by about 16% here. Those numbers coming in well below estimates, 36 cents a share. The estimate was for 41 cents, excuse me. So that's an adjusted earnings per share number. Revenue rising by 11%, but that's much smaller than analysts had been anticipating. And one analyst over at JP Morgan saying the results missed estimates across the board, but also raised questions.
Okay, so what's Shake Shack doing today? Shake Shack was up yesterday. Inside day for now, Shake Shack. What's Callaway Golf doing? Callaway Golf are gapping down. Callaway Golf looking for a bounce. AMD is up. AMD looks good, right? AMD trying to build a bullish engulfing candle. Yesterday, a gap down, closing the lower half of the daily range. Today, it looks like buyers showing up. AMD. What's Intel doing? Intel looks good. Intel, we bought some Intel. Okay, Intel looking good. Let me see how much Intel I have. I might want to add to this actually. Intel. Intel, I want to add to this. I got September 100, 105 calls. I want to do like September 100, 110 calls as well. Maybe I just sell these and, well, I don't need to sell them. Maybe just roll these 105s to 110, make it the calendar spread. So already have the Septembers. Maybe I'll do like sell October. Intel looks good though. S&P is bouncing. It scare you? That lightning scare you? Thunder? You okay? Intel looks good. Intel. Yeah, that looks really good. Yesterday, we were above the pre-market high, opening range high. We closed at the highs of the day. Intel. Gold miners, what's GDX doing? GDX. Okay, GDX. Don't forget GDX.
Sun goes down. All you can think about is that drive. And this part, it's a pure iron shot. All that God wanted. Only for the sun to rise and do it all again. No matter who you are, we're all just chasing daylight.
GDX, don't forget GDX. It broke down the downtrend. Okay, out of sight, out of mind. We want to see GDX continue. All right. Okay, yesterday we had rotation. We saw money going into back into tech, actually. Materials, industrials, consumer discretionary. Okay, GDX looks good here. GDX. All right, GDX. Remember yesterday PMI came in at 54.1 versus 54.5 forecast, so that's good. If we can just manage a bounce here. Okay, S&P, spiders again. Starting to fade, spiders. All right, Apple's still fading more, Nvidia fading. Intel, all right, so we're starting to see profit taking. Okay, rain's coming down. Okay, SPY's starting to fade. So a lot of people chased up here. We'll see if these follow through or not. A-Lab, Astera Lab, Snowflake up here. Okay, SpaceX. Broadcom, ABGO, Broadcom. Okay, looking for a bounce. We've got the gap overhead with Broadcom. Remember, we have a lot of positive gamma below, so that's supportive. Pullbacks. Rocket Labs at the high, starting to see profit taking. Rocket Labs, RKLB starting to fade a bit. Okay, Rocket Labs, GDX. AMD fading from the high. All right, so you get a better opportunity if you wait, it looks like. S&P still fading. Okay, Home Depot. Back above the 200-day Home Depot. Fading a little bit today. Looking for a follow-through, Home Depot. Microsoft. Hanging out at the opening range, high. Probably going to consolidate a little bit up here. Microsoft, you don't need to chase it. Intel looking for a bounce. Intel looking for a move towards the 50-day. ARM Holdings looks good. The chips are good. SOXL. All right, we need a bullish engulfing candle on the semis. SMH. Okay, we need a bullish engulfing, so a little bit higher would be good. Semiconductors look good. All right, let's go take a look at what the markets are doing at the moment. Okay, Snowflake looking good here. Snowflake, breaking higher. Okay, almost a bullish engulfing candle at the highs. S&P bouncing. If you're thinking about buying protection, wait for S&P to bounce. All right, GDX, gold.
Yes, so what we're seeing is tsunami wave across the world. Social media, it's growing the consciousness of it's the top five issue around the world. That's why, as I mentioned earlier, Australia, Spain, the UK, social media for kids, and many states are doing it.
Okay, let's see what this looks like. GDX. All right, looks like Soundhound's going to fade a little bit more there. Ursel. Let's see, GDX. 60-minute is trending. Okay, GDX trend break. Okay, so day 2, we're looking for that to continue. Volume yesterday was pretty elevated.
Save up to 80% in this update. Choose your favorite brand or style, paper size, and well curate the best. Shop Women's Supplies Boxes.
Okay, Microsoft looking like it wants to keep going. A little extended though. It feels like a rubber band, if you can imagine a rubber band attached to the 50-day moving average. Okay, on the daily, if you can imagine a if you can imagine a rubber band attached, you would think that this is going to come back a little bit. The only way this is going to keep moving higher is if institutions are buyers, okay? So that's what it appears to be right now. It looks like institutions are buyers because it's not stopping. If you were selling premium, you're probably sweating bullets. I took mine off last week on Friday because the strength was just persistent. Very unusual. You got to notice, if you haven't been paying attention to Microsoft over the last 8-9 months, whatever, a year, you know this is unusual, the price action, to have it move higher during the day in the morning and not fade all of the move or a part of the move. That's what was happening over here on the daily. I mean, we had plenty of days where we would bounce, look like we were going to turn, and we just close at the low of the day for multiple weeks on end. We're finally breaking out of this base down here, really. You could view this as a base down below. We broke out. And now we're moving. Looks good. Microsoft looks good. You just want to buy dips. That's the only other thing. Caveat is you want to buy dips. Snowflake looks good. Okay, let's shift gears. Let's look at the top 10 stocks on the NASDAQ 100. ARM Holdings fading from the high above the pre-market and opening range high. That's a plus. ARM Holdings. It keeps jockeying for first place between Astera Labs and ARM Holdings. Number 3 is Rocket Labs. Okay, fading. So if you like what you're seeing on Rocket Labs, we mentioned this one 2-3 weeks ago. It never turned. It waited. It made a new low, turning back up now. So shook some people out. Do I still have Rocket Labs? I think I do. No, I took it off. Okay. That's all right. Rocket Labs looking for a follow through. Just buy on the dip. Watch for VWAP. See if it bounces at VWAP. S&P still not giving us the warm and fuzzies. We know we have positive gamma below, so that should be supportive. Price action should be supportive. We got all this purple, all this bullish positive gamma down below. Looking for direction in hedge flows. Presently moving sideways. Let's see what up-down volume looks like. Probably 1-to-1 like yesterday. There was 2-to-1 on the NASDAQ on the Qs. So that told us that we'd probably see a fade. Survey says, okay, we got 3-to-1 up volume on the Dow Industrials, 2-to-1 on the Qs. Thanks to Microsoft. We'd like to see Apple moving higher, but we've got 2-to-1 on the Qs. All right, so this looks a lot better than yet. This is the opposite of yesterday.
For one, I'm so proud of the team delivering an exceptional quarter. 36% net sales growth is what we delivered. Road was
3-to-1 on the diamonds.
60 million. And the great news is for the balance of the year, we expect all of our brands in our portfolio to contribute to growth. And so very excited about it.
Okay, so let's look at the New York Stock Exchange. What this is telling me, I just posted in the room, up-down volume is 3-to-1 on the diamonds, 2-to-1 on the Qs. So stocks like Rocket Labs should see buyers at the VWAP. So look for that confirmation. ADX is hanging out. Okay, that looks good. Okay, so let's look at the Dow Industrials, see what is actually moving the Dow Industrials needle. Okay, here's the Dow Industrials. All right, Microsoft is up 2%. Disney's up, faded from the high of the day. Note the wick on the candle. Chevron inside day. Apple, Doji, it did gap up. It's starting to bounce right now. So profit taking hit Apple early. Profit taking. Now it's starting to turn. Apple.
You know, what does that say about price sensitivity, especially if we're performing well at a higher price point versus the alternatives?
Okay, Apple's starting to turn from the low of the day.
And to your point, last August, we took a dollar price increase across our portfolio on the outside. And over this next quarter, we just tested to see if we took some of those prices down, what we thought. 50 million tariff refunds, and so we support them. And the great news is we discovered that 90% of our portfolio.
Okay, Elf Beauty, looks like the CEO. CEO is on Elf Beauty. You know we like Elf Beauty. Got to have my makeup, right? Can't be walking around without makeup on. Elf Beauty, okay, from the watch list, previous watch list.
And where exactly will we see this going? Will it provide?
So just to put some context, that we paid about 60 million in IFA tariffs. And we've received about 51 million of refunds so far.
Elf Beauty, I think it was on last week. Let me see. Last week, Elf Beauty. It's always in the extended, usually.
We really wanted to use the funds to reinvest.
Previous watch list. Let's go. You have to go back 3 weeks, it looks like. 3 weeks. Elf Beauty had August 11th for earnings. Did they report already, Elf Beauty? Elf? Yeah, they reported.
Is able to cross
Elf Beauty looking really good. Elf Beauty with earnings. They beat by 48 million, which is pretty good for a small mall location type of strategy. They have very small square footage. I would say maybe, I want to say 400 square feet of display space, which is only like a 20 by 20, 20 feet by 20 feet, more or less. Of course, they have a back room, so they probably have maybe 600 square feet. They don't, I mean, most of the things that they sell are very small, cosmetic type products, but they have to keep the boxes and stuff, their inventory in the back. So Elf Beauty, $48 million beat. That's significant. Surprise. They surprised by a whole $1.03. I mean, that's a pretty impressive beat, right? Pretty impressive for a small format store like this. Let me just look here. Elf. All right, so this is like a swing time frame. Okay, you want to look at swings. Ooh, look at this. Look at this. That's nice. That's nice. Wow, that's impressive.
Making progress on international, 61% in the quarter, and we have a number of space expansion, new country launches across our portfolio brands coming this fall, including Rose being rolled out to
Elf Beauty.
Victoria, going to Canada and Mexico, and going to Sephora in Brazil, as well as expanding space with Boots in the UK. The Victoria and Rose expansions.
Looks really good. Stop low today. Stop low today.
Seems to be compelling to consumers. Do you feel as though it's still moving from thinking upon
They consumers continue to spend the category that you don't have to save up to participate in the category. You have to be by yourself, save, watch, just move to see people, even if continue to participate in the meeting, still treat yourself for sure, innovation has always been a very important innovating, really innovating. You see that in one of our and in particular,
Okay, let me buy some Elf Beauty here. Okay. Do I already have it? I thought I had it already. I thought I bought some a few weeks ago. Let's see. Elf, EFG. Yeah, I do have it. Okay. So September calls. All right. So that's good. September. Broadcom turning back up. Okay, Home Depot.
Save up to 80% and it's like me.
Home Depot. Let's see. Home Depot trying to bounce.
Shop women's supplies. Many ways.
SpaceX. All right, fade a little bit here, SpaceX. Okay, AppLovin had earnings, right? AppLovin. Okay, that gap down, AppLovin. SK Hynix trying to turn higher. SK Hynix, the chips are okay. Chips are good. I need to see a higher high now. Cerebras, CBRS, Cerebras, trying to hold the 50-day. Rocket Labs looks like it might go. AMD looks like it wants to go. AMD. Elf Beauty, I really like this one. Okay, Elf Beauty looks good.
That's a great question. You know, I love mature markets. I love markets that already are big. Like they're kind of forget those markets. They're not the very interesting. And that was the search market for Google. 56 search engine. The market was growing 15% year. Similarly, the video game industry in 2007 was 20% it's not small, you know, it's as big as movie industry. But from a consumer standpoint, it wasn't the top 10 game. It's not because it's a fundamental thesis. If we have a latent demand, think about that. Deep states of what if we put games in the middle of this toxic make them sure, make them familiar, make them social, maybe that will be good. And video games today within that first year, did you have a really good what did you learn from that?
Okay, Microsoft's still pushing here. Feels like it's straining to push higher. Microsoft. Feels like it's straining, right? It's extended. Okay, Nvidia pulling back. Didn't expect Nvidia to be that weak. Must be a note, some kind of comments or something. AMD is at the high of the day. AMD high of the day. Check out AMD. This looks pretty good. AMD trying to break out. AMD.
Well, first of all, I had farm fantasy. I had a ranch fantasy. I want to have Pinkus Valley Ranch, and I want to produce our own cool organic vegetables that are served with chickpeas. But I also just thought that it just fit perfectly for mass market. I wanted something that everybody could figure out how to play without any tutorial or instructions. You know, you had to be in it in 3 clicks. And you know, our audience was middle-aged women, and we were giving them their zen, their hobby moment. And it was a nurse who had this open in a browser tab that she could come back to, you know, in between
AMD.
helping patients.
AMD breaking higher. This looks good. Stop underneath the low of the day. Makes sense.
This was not a game for her. This was, you know, hobby or pastime. And it was also like an etch-a-sketch that she could feel creative. You know, she could just change props, the layout, the decorating all the time. And we tried to give what she did meaning, and we called it Invest and Express. So her friends would see what she did, you know, comment on it. So it fit everything that we were.
Okay, I don't know what this guy's yapping about.
We're never going to give you an award. That's cool. Like,
all right, let's go to Bloomberg. See what Bloomberg has to say. What was that?
So it's funny, that team went rogue. They were the first team in the company actually that just went and started using AWS, not our own internal data centers. And our internal team had told Farmville, we can't give you any servers for 6 months, and so you have to delay your launch. And they said, can we just go to AWS?
Google was looking really good and then gets smacked.
They did need 4 servers, you know, by the day. How do you know it's a hit?
Intel,
You know,
trying to push a bit higher. Intel, got September calls, looking for Intel to continue.
What was the sign?
Intel.
You know, when you hit true signal and you have a hit, everything says yes. It's not, there was one, you know, sneaky little metric that.
Okay, we're above the 21-day. Intel looks good for the 50-day. I have the 100, 105 call spreads. I want to do some 105, 115s at some point, maybe October, November. Intel looks good. So some of these chips are working. We got SK Hynix, looks like it wants to go SK Hynix. So buying the dip, ideal to buy the dip, or more ideal, I should say. I don't like buying the high of the day like right here, but looking good. All right, Broadcom looks like it wants to push up as well. Broadcom. Looks good.
If you're not sure if it's you're looking for the metric, it's not. During that time, this
I would like to reduce my exposure though. That is something that continues to weigh on my mind. I've got 1, 2, 3, 4 different chips. AMD, Intel, SK Hynix, Nvidia. Oh, and a Broadcom too, that's 5. So I don't need all 5 of these. Broadcom is showing the most strength along with along with Intel. Nvidia doesn't bounce soon, I'll probably reduce my exposure in Nvidia. Microsoft looks like it wants to go. So I got a lot of exposure to technology. That's why I took the SPY put flies yesterday for 70 bucks. Okay. Let me just put that on here too.
But it does mean that if you're the best player on the field, you ought to try to play every position until you can't anymore. And then you should try to figure out how do you make sure everyone else.
Okay, these put flies.
Maybe not exactly.
Okay, so we get any kind of pullback. This is insurance. For 10 of these, it'll make approximately $9,800 maximum. That would mean we'd have to pull back and pin right at this 750 area, the 21 day, by next week. Now, I never expect that we'll get a pin. I'm not looking for the maximum profit. I'm just looking for a move. If it does happen, a move back towards the 760 level. If it does happen, this is going to help insure, might make 2,500 bucks on that particular trade just as a hedge for a $700 investment. That's my hedge. I also have some VIX calls that expire in September. VIX continues to drop off. So the possibility of a spike in the short term are starting to increase. SK Hynix trying to catch a bid here, trying to take out the high. We've got an opening range breakout, volume exceeding the average 30-minute, the first 30 minutes exceeding it by 1.5 times. It gives us a signal. Now I'm looking for a follow through in SK Hynix. It gapped down today. This is very gappy stock. Very gappy stock. Broadcom looking for more upside. Okay, Adobe is trending. Cerebras is at the high of the day, just off the high of the day. SoFi pushing higher. SoFi, we have 2028 leaps on SoFi, 2028 leaps. I'm just looking for this to break out. So buyers stepped up. Buyers stepped up a week ago at the low after some big selling. We know BlackRock and Susquehanna and James Street all have pretty large positions in this stock, so they're looking for a move. So we push back to the 20-day, or excuse me, the 60-minute 20 EMA, and we're bouncing. This is what we look for. If you're going to take a new entry, you look for the pullback, not the breakout. You want to sell into the strength. This is SoFi. Okay, so we need to break above this 20 level. Then the 10 EMA on the weekly will turn up like it did over here. Okay, the last time this turned up, and we moved from 14 up to 32, 33, almost 20 points. Okay, so that's what we're looking for. That'll be a big payday. Got a pretty decent sized position in SoFi. It's just going to be patient. Microsoft's starting to show some profit taking. Microsoft, I have no position in Microsoft at the moment. Oracle, we're looking for more upside in Oracle. 2 steps forward, 1 step back, looking for a bounce now. Oracle. we start to make high. Okay, it's rule of 40 score right now, based on year-over-year revenue growth and profit margin. Palantir's rule of 40 score reached an exceptional 155% for this. I would suspect that we will move higher, very confident, or underneath the 200 day. Right now, we're just watching the S&P because the S&P is showing weakness to an extent. If you use the 20 EMA 60-minute strategy, we could move a little bit lower and then bounce. A lot of big money players are looking for a short-term pullback, long-term 8,000, 8,200 was, I believe, Ed Yardeni has a target. I think it was 8,000, might have been 8,200. Why is that? Why would he have a target like that? I'll show you. I'll show you. Okay, so if you look at the recent consolidation, okay, that's 400 points. Okay, 7,600 minus 7,200, 400 points. So add 400 points to the breakout, provided it doesn't fail. I don't think it will. The 10 EMA is turned up on the weekly. This is for long-term traders and for short-term traders, really, if you're looking for relative strength. Short-term, we could pull back. We got put credits, put flies for that. But add 400 to this, you get 8,000. So the idea is here, markets do two things. They trend and consolidate. Trend, consolidate. What's it doing now? Starting to break out and consolidate. Now, it's a possibility that this does something like this, okay? So we have a triangle pattern, but there's a possibility this could be an ascending channel, right? Ascending channels tend to be a bit more bearish. So if you're a long-term trader, you want to see this break out and continue. You don't want to see it fail and drop down to 7,400 or so. Even if it does, if it breaks down, if it comes down to 70, say 7,450, it's still above the 10 EMA. I'd be adding to my 401k. I'd be doing that anyway. 401k, most of you, if you're corporate, 401k, find out from your HR representative for your department, what's the company match? Does the company match 50 cents on the dollar up to a certain amount? That's free money. That's free money. Yes, you have to invest part of your salary. And if you're the type of person who likes to spend every single penny that you make and you don't put anything aside, that's a mistake. I think most people that are here in this trading room are mindful of the pitfalls of not investing for the long term. So find out what your HR company, what your HR rep and your department, what they will match. Okay, company match. Some companies will match $1 for dollar up to a certain amount. I worked for companies like that 40 years ago, 30 years ago, that matched dollar for dollar up to $5,000. That was back, in the 90s. So you put in 5,000, they match 5,000. No brainer. If you do that on a yearly basis, which you'll be looking at when you retire. So we're talking about retirement here. Okay, we're not talking about trading. So that could be a case here. S&P, but it looks really good for now. Fading short term. Some of these stocks still look pretty good though. So let's look at how many stocks. Only 180 stocks advancing. So yesterday was 230, 240 advancing on the S&P. We got 42 on the Qs. Up down volume is opposite of yesterday. Okay, the Dow Industrials just dropped. It's 3-to-1 down volume now on the Dow Industrials, only 30 stocks. 1.4 up volume on the Qs, 1.4 down volume on the SPY, 1.4 up volume on the NASDAQ Composite, and 1-to-1 down on the NYSE. Where does all this jabber take me, Vinny? Well, we're trending. We are consolidating. So if you're thinking about buying, you're looking for dips. We got a dip right now. Okay, so the dip is going to give you an opportunity. If you're already invested, just have some patience. We will bounce. S&P is starting to turn here. Okay, what it looks like to me right now is S&P is going to produce a doji day. Okay, so like yesterday, it looks like a doji day. I'm thinking we'll probably close a little bit higher in the range only because we got all this purple down here. So this is going to be buying down here, support. Dealers will buy the dip, sell the rip. So they will be looking for this to push back up when they're hedging. That's what I'm talking about. Net open interest. Okay, we got 7,700. We had that from the open. 7,700 was where we're looking for a bounce or support. Okay, non-zero day, 0 day. So if you're thinking about going long, you're already short, watch this 7,700 as a target. We're sliding down the lower Bollinger Band on the 5-minute chart. And most stocks are just kind of taking a break right now. Microsoft pulling back in a little. Okay. So be patient. If you're going to buy some put flies, wait for the markets to bounce. Don't buy them at the low of the day. You're always going to pay up. You're going to pay up through the nose at the low of the day. And generally, that's an area where you don't want to be buying. You want to be buying on a bounce at the high when we get rejected. Okay, so the markets, I'm just looking across all of these charts. I got about 50 charts right now. They're all showing the same thing. Some of them above the opening range high, like AMD, Cerebras. All of these are above the opening range high, but they're not moving much right now. AMD, for example, is above the opening range. You got an opening range breakout right there. Okay, so volume was pretty significant. We're above that level right now. Looks okay. Broadcom, higher. Okay, that looks pretty good, right? The gap overhead, so we just have to be patient. Nvidia pulled back, so I don't know if there's some news or something. We got earnings, Nvidia earnings on Wednesday, the 26th of August. So we got a few weeks for that. What is the news that's got Nvidia down? Tech drags NASDAQ. Dow hovers near record. Okay, let's look at the Dow Jones. Let's look at the Dow Jones, why don't we? Okay, the industrials. Dow Industrials off of the high. Okay. So what I'm looking for right now, we got a nice gain. Okay. And now we're starting to consolidate. Are we going to consolidate sideways, or are we going to pull back to the 21-day, 9 EMA? What are we going to do? Okay, MACD shows the bulls are still in control. Stochastics embedded. All right, so Dow Industrial is not giving us much. Let's see what's actually trading on the Dow. Microsoft, Disney, Chevron, Amazon, Procter & Gamble, those are all trying to hold things up. Caterpillar's flat. What's down? IBM is down. IBM actually looks pretty good. The 9 EMA is crossing up through the 21-day. So if you're like me, you could be scaling into IBM with a stop underneath. I would say a stop underneath the 21-day. That would be below the 21-day and the low of the day. I would be looking for a break above 238, 239, and a move towards the 50 and the 200-day. Mean reversion. Volume's pretty low, so it's not the greatest setup. Okay, SpaceX turning up again. SpaceX is bid here again, rising. I mean, seriously, if I was a new recruit with SpaceX, I'd probably sell some. I'd probably sell some of my available shares. You know, maybe I need a new car, the one that my parents gave me, while I was in college. Maybe it needs to be replaced. It's on its last leg. Maybe I'd do something like that. I wouldn't sell everything. I mean, I think that would be ridiculous. If you work for a company like SpaceX, you have to be forward-minded, forward-looking anyway, right? I would think anyone who works for SpaceX is looking at the future. The average employee doesn't really pay attention to the markets as much as, as we do, for sure, right? You might look at your 401k statement once every couple of weeks, once a month or whatever. If you got shares in SpaceX, I can't imagine everybody's like constantly looking at the markets. They wouldn't be doing their job. So you look at the low, and Elon's telling you, this is going to be much higher. So if you sell here, you're giving up the opportunity to make lifetime, life-changing profits in the future. But you can't speak for somebody who's just out of college, who just started working at SpaceX. Some of those will probably take some profits, but longer term people, I don't see them selling as much as the media is making it out. That's just me. I'm only speaking for myself, my experience. Okay. All right, it's 11:33 on the East Coast. I've been jabbering away, as Ron White would say. Comedian Ron White. Jabber, jabber, jabber. Adobe looks like it's going to break out some more. Adobe's been doing very well lately. Have you been paying attention to Adobe? Adobe. Okay, triangle pattern right now. Adobe looks like it wants to break higher. Okay, Adobe. MACD is still rising. It has been bullish for the last 6 weeks or so. Still looking good. People I respect out there in social media have positions in Adobe. I don't have a position in Adobe. I had months ago, but I wound up selling it on this move lower over here back in June, I believe it was. Might have been earlier, actually. It might have been up here when it rolled over, I believe. Adobe looks good. SpaceX back down now. Okay. Dell Computer, that's on the watch list again. Dell Computer. It's just hovering here in the upper half of the Bollinger Bands on top of these volume by price bands over here on the left. Dell Computer. Okay, watching Dell. Okay, let's look. GDX. 2 days after the trend break. All right, so we are fading. S&P is fading. Looks like 7,700 would be a good area to look for a bounce. Take some profits off. Let's see what happens at 7,700. Okay, so that's S&P. We're still fading here. S&P 500. Okay, you're still fading off of those all-time highs. I'm less concerned about the noise in the markets right now. Looking for more of these stocks in the tech sector to break out. Okay. So CRM, Boeing, Honeywell, all of these are lower right now. Sherwin-Williams, IBM, 3M, Consolidating, Goldman Sachs. All right, so the banks look pretty good actually coming into this week. Citigroup turning back down to the 50 days. Citigroup, Wells Fargo. Okay, all of these taking a little bit of a hit, probably all for the same reason. All right, let's see what these are, what's going on here. Let's look at JP Morgan. Okay. Okay. Let's look at XLF. XLF. All right, this is a day to just kind of sit back and wait for signals. Early, we got some nice little pops on Microsoft, Broadcom. Amazon's starting to turn right now. Amazon. XLF. Okay, nothing here. Okay, KBE. 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 The banks. Okay, Goldman Sachs. Trying to find out if there's just some reason why these are all pulling back. All right, I don't see anything. It's just other than people taking profits. That's what it looks like right now. Microsoft.
To speak.
No, it hasn't been for 30 years. We've averaged mid-single digit, depressed prices, or at least bring us some disinflation.
U.S. Treasury, 5.19%. Yields are up again.
It's actually not being driven by demand, but it's being driven.
Oh, it just feels like a chop session today. I think we're probably going to bounce here pretty soon. Why do you think we're going to bounce, Vinny? Because all of this purple down below, all this positive gamma below suggests that we're going to bounce. We know that 7,700 is support.
Central bank in terms of figuring out what tools to use and how to manage it.
Just digging into the AI capex concerns you raised, how does that really manifest? Is it just the underperformance and the hyperscalers, more credit concerns brewing? Because I would point out just in the last week, spreads had tightened for tech corporate bonds.
And I think there could be, we could go through periods where they do tighten, especially if we get a few hyperscalers that do report positive earnings or have some kind of positive outlook. But I do think that hyperscalers will be the epicenter. I think there are a lot of parallels with the late 1990s, early 2000s with the telecoms. They're the ones that took on the debt. They spent a lot of money building out fiber optic networks. Ultimately, that was a real positive for the overall economy, but many of them were left holding the bag. So we could certainly see that. Also, semis could be under some pricing pressure. I think where we're likely to see opportunities in the AI food chain is going to be those companies that easier for data centers to continue. For example, more efficient use of energy, more efficient use of water, since that tends to be two of the biggest gripes that many communities have as they fight the build out.
Yeah, this audit of the new data center projects in Texas, of all places, is getting a lot of attention this week. You probably, though, have to give corporates some credit for managing.
Okay, what's AAOI? Look like I saw Frano mention AAOI earlier.
This quarter.
Okay, turning back up. AAOI looks good on the weekly.
We absolutely do. And we
So dip buyers showing up over the last week or so. AAOI, Applied Optoelectronics. When you're looking at AI, the thought process is you don't necessarily at this point want to buy the companies that are spending all the money, like Meta or Google. What you want to do is you want to buy the companies that those companies are buying from. So all this optical connectivity, fiber optic, I believe AAOI is in that business too, as well as GLW. AAOI, let's see. I don't want to speak out of turn here. Okay, Applied Optoelectronics. Fiber optic networking, yeah. Internet data center. Data centers. Okay, so that's the important part. So you want to be buying the companies that Microsoft and Meta and Google, these big companies are buying from the suppliers. So AAOI should be a good opportunity on the dip. Okay. So once it gets above the 50-day, that would be an area where I'd be looking to buy. Longer term position. Let's see some of the other names in the group, see what they're doing. Lite, LITE, and GLW. Okay, these are all doing the same thing.
Yes, getting a little frothy, but still nowhere near where we are for best equities.
As we get into the winter, we'll probably talk more about energy in Europe.
All right, the sun is out now, so that thunderstorm went by.
Winter, probably less LNG storage than they did last year. That could be, well, that's an issue for later. Christina, good to see you again. Thank you. Christina Hooper.
All right, still ahead, the CFO of Block joining us as the stock falls despite beating earnings estimates and raising its outlook. That follows AI-driven layoffs earlier this year that affected roughly 40% of the staff.
Silver, gold.
The watch list, 2 p.m. Eastern, only on Schwab now.
Okay, Schwab.
Fired or something that you.
Are Adobe still pushing?
Known to be one of the best investments.
S&P still fading. Okay, Doji.
Weekly sponsor is you say you love something, and then you get a no, and you just go away.
You just won't.
You probably wouldn't love it if you got one no and you went away.
Let's see what these are going for. The S&P Spider put flies are going for 90 cents. All right, 90 cents.
Behind every great golf shot is great equipment powered by advances in technology and smarter manufacturing. AI assisted design expands.
Up about, we're up about what? What's 70 cents, 90 cents? We're up about 28% right now on these SPY. I'm not really looking forward to a pullback because I do have positions I'd like to unload. NVIDIA is one of them. Intel, I'd like to reduce my exposure in Intel. I'd like to take some SOXL off. Okay, SOXL is just sitting here. Maybe I just take this off now. I got a profit. Well, what if we break higher, Vinny? Yeah, what if we break higher? What if we break lower? And I have too much exposure. So I have to weigh those prospects, okay? All right, so I got January calls. So I'll leave these alone. SOXL. I bought January thinking that a lot of these stocks were going to bounce towards the end of the year. Here's Micron. That looks pretty good, right? Micron. Let's look at SanDisk, SNDK. Gap down, SNXX if you're interested. These are probably going to be much higher by the end of the year, so you have to have a longer term perspective, in my opinion, because we could pull back a little bit more. Or you can just sit on cash, right? Cash is a position too. If you put your cash into a lot of these sweep accounts and some of these brokers give you a pretty decent return. I think Robinhood has got the best actually. I'm not sure what Fidelity, how much you make on your cash, Frano, percentage wise, but I think cash is still a very good position. Even at 4% inflation, right? If you're making 5%, at least you're 1% in the positive. And waiting for opportunities like this, I would consider this pullback in the chips a opportunity, so long as they turn back up, obviously. You got big support here, the volume by price bands over here on the left. All of this over here is support. So we bounced just shy of that level. So I'd be looking at SOXL. By the end of the year, we should be much better. SoFi have a 2028 leaps. That's right, 2028, not 2027, 2028. June, I have the 20s and 25s. So that'd be a nice payday once this gets going. What we're looking at on SoFi on the weekly is it for it to stay above the 10 EMA, like over here. Stays above the 10 EMA. Look what it did last time, 14, almost to 34. So almost 20 points there. 20 points on the size position I have is retirement money, really. So I'm just sitting here just waiting for it to do what it's going to do. Susquehanna, Jane Street, and BlackRock all have positions. I think they own like a very large percentage of the outstanding shares, if I'm not mistaken. Let me just see real quick. Palantir, what is the institutional ownership percentage of outstanding shares? Let's see. Survey says about 60%, 62% of the outstanding shares in SoFi are owned by institutions. BlackRock, Vanguard, State Street, Jane Street, and Susquehanna, to name a few. So they own 4,175 institutional shareholders currently reporting positions in the company. So when you're looking at SoFi and you think, oh man, this is not going anywhere. Well, it's not going anywhere for over 4,000 funds. I don't think they're looking to sell. Now, if we did drop below 14, I would think there would be more problems out there, but more than likely this is going to break higher. I'm not professing that you buy SoFi. I'm just telling you why I have a position and what would get me out of it if it didn't work. Have to be a big spike in volume. Microsoft is still holding the high. Okay, I'm going to rest my voice here for a minute. There goes Cerberus. Cerberus, CBRS. CBRS is turning back up. We need to take out this level here, Cerberus, right in here. Need to take that level out. 50-day, we're above the 50-day. You know how I love my 50-day. 50-day. Okay, so this level here is another level right in there. Okay. Cerberus, chips, what's SpaceX doing? SpaceX turning back up. Okay, Cerberus looks good though. Cerberus, AMD turning back up. AMD. All right, so the markets are showing strength. There we go. We got a nice little bounce in the S&P. Nice little bounce. Okay, let's see. Net open interest. 0-day net open interest. 7,700. Okay, let me just 7,700, 99%. What do you want? You want something to eat, kitty cat? Hmm? Okay, here you go. Here you go. I have one kitty cat that just he loves to stay in the office all day, all night. I have to run around her here at night because otherwise she'll wake up in the middle of the night and pester me. Okay, watching for a bounce here. Potential bounce area. Okay, SPY still is fading here. Okay, what does Core 1M look like? Core 1M is at 7. Okay, not a whole lot to do here. We're just fading a bit. Not all stocks are moving lower. We got 172 stocks advancing out of 500. 40 on the Qs. One-to-one up down volume. One-to-one up volume for now on the Qs. Almost 2-to-1 down volume on the SPY. What's GDX doing? GDX. Pulling back. No follow through there. Adobe. Okay. Okay, we continue to move a bit lower. Chips seem to be selling, profit taking. ARM Holdings is hanging in there okay, I guess. It's fading from the high of the day, but we do have opening range breakout signals. All right, so maybe in the evening session, this can pick up a little bit of a bid. Intel, no. SK Hynix, no. JP Morgan's off 0.75%. Got a feeling these will catch a bid later. Oracle, nice move today. It did gap down.
This Fed is going to be. The market doesn't know the new rules of the game of this Fed. The market's going to lead the Fed. We've had a policy shock because we've had the pricing going from a dovish Fed down to a hawkish Fed to now to an uncertain Fed that might be losing control of the market. There's a point where yields are compensating investors enough for them to start to sell. We don't see bond yields to happen in the economy over the next 12 to 18 months. Think yield
kind of fluctuates a lot.
In many ways, the bond market is a nothing burger this year. And that brings us to our Treasury yields. It's easing this week after July's sharp sell-off, longer dated securities in particular. This chart shows a steady rise in yields at both the front and the long ends in 2026. You can see the steady rise up. While yields are staying a little bit higher today, there's that little move higher, they do remain below last week's high when the 30-year bond yield reached 5.28%. That's the purple line here, a level not seen since 2007.
All right, GDX continues to move lower. SPY, S&P heading lower. 7,700 is down here below. Looks like that's where we're headed.
Can deliver on its promise for lower inflation at 2% level. Bank of America's Mark Bonnet spoke about the Fed's decision to hold rates unchanged with little explanation.
It's wonderful that you're present.
Apple still pulling back. Apple. Adobe still moving. Wow, Adobe is showing relative strength. Adobe continuation here. All right. What is the news on Adobe? Anybody buying here? Okay, first buy signal on Adobe since 23, huh? Interesting. Adobe. Let's look at triple MACD setup. I don't know what they're talking about.
We also stay with the communication side because the market's thinking in the state, we want to say, he wants to reform.
Adobe still following through. Okay, let's look at Broadcom. ABGO, Broadcom. All these have turned up. Apple. All these are bearish at the moment. CVO. What about SpaceX? SpaceX. Yeah, too early. SpaceX. Up a buck. It's off the best levels of the session. SpaceX. AMD. Okay, it's on a buy signal on the short term, but the intermediate needs to turn up the default MACD. This is something that Gerald Appel, the creator of MACD, perfected. He had a short term, a default, and a long-term MACD. When all three of these have turned up, this is for long-term. The default is for swing trades in the short term, and for entries, the short term. 5-5. Okay. 5-14-5. Okay. AMD. Just scanning through stocks right now as the markets continue to fade. Once we get down to S&P, once it gets down to 7,700, you might want to think about a buy down here. Just watching the markets fade. Once we get down to 7,700, it'll be a good area to start thinking about a buy. If we get any kind of volume there to indicate or confirm. We're just fading at the moment. Oh, all right. We just continue to drift lower. All right, we're still fading. Be patient. Earnings have been really good. So it's just a matter of 2 steps forward, 1 step back. We're going to give some back from time to time. All right. Excuse me. We continue to fade down to the 7,700 level. We pointed this out earlier that that was potential support at 7,700 right there. We got a lot of purple, a lot of positive gamma down here. $7,700, 99 percentile. We're right at that level. Why? Oh, okay, I see what's going on here. Coordinates were not correct, 7,700. Okay, so we're right at that negative gamma spot right now. Let's see if we get a bounce out of this. Looking for a bounce. Let's see if a volume comes in, volume picks up and we start to turn. Watch for hedge flows to turn as well. Hedge flows. All right, it's 12:17. Let's switch channels here and listen to CNBC.
Right? Musk praised it on the SpaceX earnings. If you take a look at what the stock, it's up 12% over the past 5 trading sessions. Don't forget, it reports on August 26th, so it's the only one of the big cap techs at this point that hasn't delivered.
Yeah, that's the other thing. Nvidia gapped up today. The Nvidia gapped up. Gapped up yesterday, gapped up the day before. It's been gappy, Nvidia. So yeah, unfortunate it doesn't go up every single day. Maybe buyers step up here. Looks like we're going to have buyers showing up at the low of the day now. Watch for a buy here. S&P, we're at support.
Chips into data centers, like 90% of that is flowing through NVIDIA. So it didn't make sense to me that the stock got so unloved for as long as it did. I'm not surprised to see it trading up into the print, especially since historically it always trades up into the print right before earnings. The surprise will be if it continues to go up into the right after we get the print instead of selling off.
Watch for a bounce here.
Finally has momentum and it can keep going. Now maybe it had moved, the way it is now because there just continue to be questions about the circular deals and the whole nature of that. Don't you think? I mean, that's been kind of a constant drumbeat in the background.
But if you question that, you have to question the entire thing, right? Do we still feel really great about SK Hynix and Samsung, or do we not? If you do, then questioning NVIDIA's ability to fund its next generation of customers to separate itself from the Metas and the Microsofts that are its largest purchasers at the moment. If you believe in one, you have to believe in the other.
Malcolm's right. Like, we can't pick and choose which aspects of the overall AI trade. It's like pulling the wrong Jenga piece out.
Apple turning.
The way to think about this is, all right, what's the alternative? Your Jensen Wang.
NVIDIA.
10 neo clouds going up, data centers from neo clouds, where it's not Apple, it's not Alphabet and Amazon. They don't have their own cash flow. So they obviously are going to be out there borrowing money. They're working with companies like Blackstone, et cetera, to finance these facilities. If you're Jensen, do you want NVIDIA chips in there? Or do you want, I don't know, Tritium chips? Which would you prefer? So it's one or the other. If you're the biggest player in this ecosystem, which NVIDIA
Okay, we need to see volume and needs to start to scoot higher For now, we're just testing 7,700.
Still massively free cash flow positive.
Yeah.
So they still have the ability to lend out dollars
to invest.
in the form of
Yes.
structured loans.
That's what I'm gonna say, 48.5 billion in free cash flow.
Just says that.
22%. So I mentioned, NVIDIA definitely got a lift this week off the Musk comments on the SpaceX call. Well, today's lockup day, it starts, right? It was a peculiar week, certainly, as you had earnings and then so quickly after followed by what is a stair-step lockup test. I guess we're calling it that. Morgan Brennan's been following this so well all week. So what can you tell us now about how you think investors should be considering all this?
I think there's a lot to consider, Scott. So let's see how much we can break down here. Available share count surges more than 140% today to more than 1.5 billion. That's from 629 million in the IPO. Still, billions of shares are going to unlock into 2027 by January. 50% of shares in free float. That is according to Bernstein. So to your point, we're just going to see these tranches open up over the coming weeks, coming months. Many longtime investors, though, big longtime investors say they plan to hold. And some, like Kathy Woods Ark, have actually been buying more as the stock has sold off here in recent days and recent weeks. Speaking of buying more, something else to keep in mind, because some indexes change their
All right, looking for 77 to return, move back up.
Bigger floats will mean a bigger weighting, which in turn could mean forced buying for funds. So take the NASDAQ 100, it relies on free float market capitalization factors. Adjusted on a quarterly basis. Next adjustment is early September. So that is going to be something to watch here. Even as insiders sell, there may be some buying that has to happen behind that. Meantime, SpaceX announcing the Texas site for its mega manufacturing facility, Terafab, where it's going to build AI semiconductors with Tesla. They're saying $16.8 billion joint investment for the initial phase as, get this, quote, this was in the release today, the combined SpaceX and Tesla demand for chips is expected to be in excess of 1 terawatt of compute, which is significantly larger than the current global supply. So when we talk about the ramping capex that we're seeing in SpaceX coming off of the earnings this past week, this is one of the big contributing factors. Nonetheless, shares are still hanging on to gains here, Scott. So one to watch.
All right, and we will. We'll discuss more. Morgan, thank you, Morgan Brennan, for us on SpaceX. How are you guys thinking about this? I'd like to hear from everybody. Go ahead, Bill.
Yeah, I mean, I personally own some stock I've bought over the last week, and it's one of those things I just want to.
Let's see, Elf Beauty. I'd like to buy some Elf Beauty. Can we get a dip? All right, so it's consolidating at the highs right now. Elf Beauty coming out of a squeeze.
Is definitely something that everybody's leaning on right now. And building data centers in space, it sounds like a terrific story. But the compute side of this is really where I think this is.
I'm going to take a look at here. Elf.
Show the Cursor acquisition and
Let's see what Elf looks like. Elf.
And I think that's going to be something that over the next 6 months that becomes a really
Okay, it's over here. So selling put spreads makes sense.
Understand what the opportunity
IB rank is 81%. So it's most likely going to scoot higher. Elf Beauty. Elf Beauty, probably going to scoot higher.
$86 billion, I believe it was, through the IPO. Largest IPO raised anybody.
It's a good
and they've already spent like a fifth of it in 1 quarter. So they're gonna
stocking stuffer, right? Elf Beauty, the products.
So if you didn't like it with only 5% of the shares available to trade, you're gonna love it at 12% available.
Well, I mean, that's a little bit different though, and not sort of understanding what the opportunity is.
Yeah, you could look at this and say that there's a tremendous opportunity. It may be hard to quantify today.
There's a tremendous opportunity there. Like, what am I missing mathematically that is suddenly going to change? Yes, okay.
Look at
we're targeting one new launch a year starting next year.
There's a lot of you understand data centers on the moon manned by humanoid robots. Why is it so difficult?
Like I said, too hard.
What's your take? That's it?
I'm like the rational person before the IPO who would come on the desk and put cold water in people's face.
You didn't get more hate than I did.
I felt bad at the time. And I was like, look, I'm as excited as you are.
See, that's
I want all these innovations. I don't know that I want to buy a $2 trillion market cap on $5 billion in revenue and wait for that $5 billion to get to $100 billion and still haven't ordered that
That's not
stock.
fair. Maybe the greatest leap of faith
I'd
in
like to buy it
history.
under 100. Now you have a market. I think I'm going to get a crack at it under 100.
I would add under 100. It's down 50% from the opening, from the IPO high.
What if you on the network though saying on IPO day 225? So what? Buy it, put it away. All right, now 109. I'll buy it and put it away. All right, so then what's the difference? It's like we're totally insensitive to price, totally insensitive to valuation, and this is about like the emotional need to belong to the story. Then who cares what the price?
I'll make a good argument. This company was the IPO was engineered to perfection, right? This is the best we've ever seen. The immediate inclusion into the indexes, the 5% float was all you could get. The insiders being locked up and not allowed to even think about selling anything. This is the first crack anybody's going to get it.
To me, that's a pretty interesting story. I'd like to see some of the
Chance, give it a few minutes on. I think that's as good as it can possibly get.
NVIDIA turning. Broadcom fading a bit more. NVIDIA's turning here. NVIDIA turning.
Exactly. That's my point. So 115 was a level that I liked on the way down. I mean, even when it was trading near 200. So I mean, I would add a little more 100. But here's the point.
What would you tell somebody who managed to get 100 shares?
Okay, let's take a look at NVIDIA. NVIDIA.
Their wealth manager at Morgan Stanley, so their print is 135. They didn't sell it. They didn't do anything. They watched it run up. They watched it come back down. Would you tell them right here, 108.99? This is the place to average.
I don't know their situation, and I hope they talk through that with their wealth manager. To have here's the thing. I don't own it. I'm gonna pull a McEnroe. Answer the question. I don't own it in a portfolio. I don't own it in portfolios. I read it for myself for now. Okay, so we're gonna go.
I like it under 100, depending on why it's under 100. That's my answer.
Okay. All right.
I like it on with the side of fries. Like, give it to me for free. I'll take it.
Okay. We do have another committee move ahead. It's from Malcolm. We'll tell you about it when we come back.
Okay, looks like NVIDIA might get something going here. NVIDIA. I already have a position, so I'm looking for that to continue. All right, looks pretty good. August. Looking good. Okay, S&P looking for this to turn up. I see Mondo went long at support. S&P 500 bouncing at 7,700. Okay, so far so good. Okay, do I want to take these SPY put flies off, buy them again at the low? Let's see what I can get out of these at SPY put flies. It's only 28%. 28%. %. Looking for a bounce. Okay, looking for the markets to bounce. Okay, nothing yet. We got resistance overhead 77.25. So you can get like a 25%, 25-point move here, Mondo. Okay, let's see where we go with this. 77.25. Start to see resistance at 77.25.
It's a stock that is down 18% year to date. It's been down 8.5% in 1 week. Reported earnings, reported increased costs tied to new AI-powered features on its app. Forecast slightly lower subscriber growth than Wall Street expected. That stock, Spotify. Let's take a look at the chart. Malcolm tells us why he sold.
Yeah, well, the short of it is this was a much growthier company back in 2020 first bought it. And for the last year or so, I've been holding off and impressed by the fact that even though they've increased prices a couple times over that period, subscriber growth, paid subscriber growth has still been going up, which is a good sign. It shows that they actually do have pricing power. But then when I start to hear a company talk about its operating,
Okay, we're turning the corner.
marketing to acquire its next new customer, which is kind of a concern. They're also talking about operating expenses going up because AI slop on the platform has gotten so out of control. So they talk about how much time and how many tools they've had to create in order to manage that AI slop getting onto the platform. And I think it only gets worse from here because as more attacks against people's critical infrastructure and everything else are being created by AI tools. We talk about the cybersecurity names and the impact of all that. Also in the creative space, like Spotify plays, that's also a problem for these guys. And it's increasing day by day. And so as the OpEx goes up, I think that tends to be one big problem that they have a hard time getting.
I think here's the problem. It ran up extremely nicely in 2024. It became a tariff darling early 2025 with some good earnings and forecasts. And it's just really kind of giving that up and settling back in. Where you see that move, guys, please? Couple years, 3 years, please. Go ahead. I'm sorry. Yeah, if you see where it was in 24, it just went higher. It was a darling during the tariffs. We bought it during the tariffs, and that was sort of our play that was not connected to everything else. That along with Netflix, and that's just coming out of it here. A lot of it.
The wage on this stock is on 400. It's unbelievable how the violence with which people change their minds, positive and negative, on this stock.
I bought it in the 140s because of the freak out over the Joe Rogan experience and all of that. And I was like, I'm willing to take a bet that people aren't going to cut the cord on Spotify just because they don't like one creator. And it has worked out well, but I think the challenge is that, like, looking at a company like this at 34 times forward earnings, when you could own something like a Netflix that's trading below the market at this point, and they kind of operate in the same space, it's a tough sell at this point.
All right, Joby, let's take a look at that one. Stock was up last we saw after they beat expectations. It still is up 6.5%. Did get reiterated neutral today at Cantor, and that's following that earnings report package. What you take here?
So I own a position in Joby. It is my only eVTOL play at this point. I was in Archer as well. I got out of Archer, consolidated into Joby. I think this will be the first one to truly commercialize eVTOLs, and they are way ahead of the field in a lot of ways. One of which is last year they acquired Blade, to the helicopter flights from the west and east side of Manhattan. A lot of people going to airports or going to the Hamptons, or whatever the case may be. That acquisition brought in 120 million plus annual revenue. Revenue becomes really important when you're funding massive capex to launch this fleet of next gen, and that's where they're at now. So they partnered with Toyota. Toyota's got a joint venture with them and an equity stake. And basically, I think by the end of this year, you'll be seeing the taxi service get off the ground in Dubai and Abu Dhabi. Ultimately, that'll come here. I witnessed personally the flight from JFK to the west side of Manhattan. It was majestic, if I don't mind saying so myself. And look, I don't think that this is the type of company you should invest in if you need earnings and dividends, because you ain't going to see either one of those for a very long time. But as a spec, this is one of my favorite plays.
Let's run through a couple real quick. So Shake Shack, see what follow through there is from yesterday's news, if any. It's not much, Judge. Given about 5% back on news that Jeff Smith's Starboard had taken a position there, called the stock too cheap. Today it goes to 90 from 80. The target does at Mizuho. For those who didn't have a chance to hear you,
Okay, just looking for this S&P to turn.
I think the stock was already rallying, and then the news of the activists got people excited, because the truth is, it's a $2 or $3 billion market cap where it's been trading. It's way too small of a company relative to the size of its global brand. It should be much bigger. They need to get better operating business. The good news is, the turnarounds that Starboard has done elsewhere in the sector are very instructive to look at. Say, hey, what if that happens here? So I think that's why stock had a nice rally.
Okay, Uber at $91 at Wedbush today. That's after earnings. Not perfect, they say, but not thesis changing either. Is that how you would read it, or what's your own take here?
I thought it was an incredible earnings report, and I said the day before the report, don't worry about it because nobody cares. The stock is down 6 out of the last 7 quarters after reporting. Doesn't matter if they beat, if they miss, if they guide up, if they guide down. Nobody believes that the strategy that Dara is pursuing on AVs is going to be competitive with Waymo and Cybercab. I do, but I am obviously in the minority, and that's why the stock trades, I think, now at 15 times forward earnings. So if anybody believed that they would be able to put together this coalition of third-party AV companies that would flood the platform with available rides and they would win, the stock would be $120 a share. And maybe that belief comes someday.
Nvidia is still turning a bit. Nvidia.
The weather is fine, as you can see by my tan, but like I'm very lonely.
You're on an island of many right now, so
Well, the analysts are raising targets, but investors aren't buying the stock. Oh, I see what you did there, Judge.
You're gonna need the equivalent of a FIFA World Cup every quarter in the meantime until robo-taxi.
Here's what I think could go right. The one thing that could go, it won't have anything to do with an earnings report. They're launching with NVIDIA. NVIDIA's got Wave. That's going to be their entry into the space. They have another 10 OEMs, like car manufacturers, that are rolling cars right off the assembly line that are AV ready. Okay? So they've got big companies that have a lot invested in being players in the game. The next thing is financing. Some big private equity, private credit players that recognize, hey, this is a business. Let's buy a fleet of AVs. We'll put them on the Uber app. And the average AV on the app right now is 15 or 20 rides a day. That's a business. We take out the most expensive part. The human driver who's sitting in the front seat who has a take rate of 20, 30%. We rip him out of the seat and we got a real business here. When those things start to become real and not just things that are talked about on the conference call, this stock could re-rate overnight. I just can't tell you when that is.
You can sit with your Uber, and I'll sit with my SpaceX.
All right, fair enough.
All right, Frank Holland has the news update for us. Hi there.
Hey there, Scott. A federal judge has dismissed Alec Murdaugh's lawsuit seeking $600,000 from a former court clerk. Murdaugh claimed misconduct by the court, and the clerk, cost him a fair murder trial. The judge ruled that Murdaugh would have paid those defense costs regardless. His retrial for the murder of his wife and his son is set for April. The head of the World Health Organization now says the world's fastest growing Ebola outbreak in Congo is spreading faster than efforts to fight it. Some health workers there, they've walked off the job, claiming they haven't been paid since the crisis began in May. Nearly 4,000 cases and 1,800 deaths have been confirmed. And another dangerous heat wave is spreading across Europe. Italy has placed all of its major cities under the highest heat warning, while Austria reported its hottest temperatures ever. Some areas have climbed above 104 degrees. The heat is also fueling wildfires and causing problems for transportation and power systems. Scott, back over to you.
All right, Frank, thank you. That's Frank Holland. Up next, Josh's best stocks in the market. We will shine the spotlight on a fintech name. Next.
All right, we're starting to turn here. All right, starting to show signs of a turn. At that, what's going on here? I don't want that. What is going on? Oh, there we go. Okay. I'm just talking to myself. Don't mind me. You ever do that? Talk to yourself? All right, looks good. Looks good. All right, here we come back down now. See if we get a bounce out of this. Spoke too soon. Spoke too soon. All right, a little bit of profit taking.
Default $36 billion, which is 15% higher than this time last year. So certainly you are seeing a bit of acceleration. And the default rate for high yield bonds, for example, is around 2.8%, which is still below the historic average of low threes, but above kind of where it's set for a number of years through COVID and since then. And you're seeing a surplus of issuance in high yield credit. And high yield is an important area to focus on because it is sort of that canary in the coal mine, if you will. And so we are seeing surplus of issuance.
All right, Josh, that's Dr. Clark. We have a trade update first and foremost. We'll do block first. What do you got?
All right, so we had a lot. Untrustworthiness of Jack Dorsey, joking around. But anyway, we talked about this name at 76. It ran up to 86. Now it's pulling back here.
Top 10 still holding the top 10. ARM Holdings, Lumentum, Astera Labs, Seagate Technologies, T-Mobile, Rocket Labs,
And for some reason, their expenses are rising. So
Micropower, ASML,
Jack Dorsey for long. So what I would tell you here is
Warner Brothers Discovery, that's new, and KLAC rounding out number 10. AMD very close. AMD very close by. AMD's turning back up. NVIDIA is still turning. SpaceX trying to turn back up.
Today we're going to talk about something entirely different. Visa. Visa is one of the greatest growth stocks of all time. This stock is up 3,250% since its IPO. That is a 33x return. You can count the number of stocks.
All right, we're starting to lose this level as a looks like a bear flag.
This is basically one of the best businesses in the world.
Okay, looks like a bear flag for now.
Trust them, and they are finding new ways to win regardless of what happens with the economy. The last reported quarter was outstanding. Revenue was up 11% year over year. Earnings also up 11%. You have a golden cross in the chart. If we have the 50 and 200-day moving average, you can see that. Basically, the stock made a high in May of 2025. 375 is that level. It has not revisited since until now. I think we're going to make it salt on that old resistance level. And when it gets through, there really are no natural sellers here. The path to 400 is
Intel trying to turn back up in the evening session.
consumer theme this year. Visa plays heavily there. If we think the global economy holds up, which so far is the case, if we think employment trends will hold up, there's no reason why this stock shouldn't have a stellar back half of the year on that technical breakout. So I wanted to bring it to you and show it to you now. It has been on the best stocks list for a little bit, and I think that'll continue.
All right, Malcolm, we've got the Visa.
I think they process globally. We never really talk about the fact that Visa is literally in everybody's pocket the same way the iPhone is.
Is that sort of the overarching thesis as to why you own the name?
Yes, and the fact that I don't think it's easily disruptable by AI or anything else, right? They own the third largest number of patents on blockchain technologies behind Bank of America and I think MasterCard. And so they're not going to get counted out of the game one way or another. They'll continue to be sitting right between every single swipe transaction that happens forever and ever and ever. And so I just think it's one that you continue to own forever in your portfolio rather than trading in and out of it, like Josh and I were lamenting doing in our younger, less smart years.
Oh, yeah. Nice tie too, right? We're gonna embarrass him a little bit.
No, that doesn't embarrass me.
He's not hearing that. He's not hearing that often.
I look at this kid and I just see millions of dollars.
I appreciate it.
Oliver Rennick, he's next. He's got some options action. We'll play it next. Some options action with Oliver Rennick. He's at Cboe Global Markets in Chicago. What you got today?
Scott, options flows around the energy sector ETF XLE are complicated as the group vies with tech for best performing sector year to date. Overall, there are more puts trading by volume this morning, with traders buying 11,000 puts versus under 8,000 calls. But we're also seeing a lot of puts selling as well, meaning traders don't think the group will fall far. And we're also a few big money buyers of bullish high premium calls. One group spent a little over 175,000 on a stock replacement trade, buying deep in the money, 35 strike calls expiring tomorrow. And a different trader bought $150,000 worth of 60 strike calls expiring in mid-September, a bet on a 6% rally. Finally, on the bearish side, lots of volume in the 55 strike put expiring mid-September, a trade that needs XLE to fall at least 5% over the next 5 weeks, Scott.
Okay, Oliver, thank you. That's Oliver Rennick. I'll see you a little later this afternoon. You have a lot of positions here, Bill, Exxon, Kinder Morgan, Cheniere, quick.
Yeah, I think, I mean, you're going to see structurally, energy, crude oil will have a higher floor. But we really like the pipelines, the midstream. You got the Cheniere, Kinder Morgan, and they're going to continue to get paid on moving into power. It's just under, it is under investment, and the demand in the United States is going to be needed for power and AI.
A break and then the setup ahead of Berkshire's report this weekend. Back to Berkshire reports on Saturday. That's going to be closely watched, as it always is, for obvious reasons. You want to get the first crack at this, Josh? Then Bill will hear from him too. You guys both on it?
Yeah, the stock has worked this year. I think it's a combination of the stock portfolio. They have Apple, they have Coca-Cola, they have American Express. They have a lot of, just happen to have a lot of the stocks that are working in this tape, but also the insurance piece. Insurance stocks, we've been highlighting them all year. Travelers, Chubb, Allstate, Met, one after another. All of those charts look great. So this doesn't look like it's out of place. I do love the way they report. No conference call. Drop the news on a Saturday when everyone else is busy. I'm glad that they're continuing that tradition. I'll be paying attention to what they have to say, and we'll talk about it next week.
Alphabet too, remember? Right? We got that recently from Mr. Buffett himself.
That's right.
So we'll watch all of that. What's your take here?
I mean, the insurance business, I mean, that's been a huge compounder. It's up 5% year to date, but it's actually making new highs right now, year to date. We've been leading into it on weakness, and I like this from a defensive compounder standpoint. I think there's some upside here, sure.
Dare I say the stock got a reboot on the Google news?
Yeah, absolutely.
Alphabet news.
Yeah,
right?
we looked at it as
I think so. I think so.
I mean, if you look at the chart, it would suggest that.
Yeah, that's when we bought more. And we talked about it on the show. It was right after that news. We looked at us redefining, what their goal is and what their site sought out to be doing. But then Buffett turned out to be the one that was behind it.
By the way, the railroad's on fire. You got a lot of industrial demand in the current economy, and they also own one of the largest collections of utility assets in America. So it's almost like everywhere you look, Berkshire is making money.
Defensive compounder.
I don't even know that they could spell AI. Doesn't matter. Like they're in all the right places, and the stocks reflecting that.
They can now.
It's AI, but I'm just saying, like this. You don't have to invest directly to AI to have benefited from AI. And here's one more example: company that's got a lot of businesses that are doing really well based on the build out.
All right, we'll take a break. We'll come back and we'll do finals on the other side.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
All right, S&P continues.
Veteran trader.
S&P continues.
Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at SchwabNetwork.com.
All right, so far looking pretty good here. S&P. Nice little rally off the low. 77.25 is resistance.
I'm Jenny Horn alongside Alex Coffey. We check in on markets though here that are lower pretty consistently across our four major averages. You know, we have kind of seen this drift to the downside today, but it hasn't been as maybe substantial as the intraday volatility we've seen I mean, of course, throughout this year, but still at least hanging on to week to date gains, also year to date gains in our four major averages, but lower today, modestly so. S&P is down about 0.1%. The Nasdaq 100 down about 0.2%. Well, the Dow is down about now 0.6%, which is an interesting move because usually we don't see that index making the most notable move. But Russell 2000 also down about 0.25%. So, Alex, when you assess today's market activity, I mean, what sticks out to you?
Yeah, well, there's still 3 hours left, so things can change. So let's start with that disclaimer. But, you know, we're only have 2 days, which are Tuesday and Wednesday. So the last 2 days this week that we've closed higher than this in the S&P 500. So with that in mind, we're essentially at all-time highs. So that should be our baseline, sort of assessment. Things are pretty good. But what is pretty notable right now, and again, this is the part that can change without notice, is the volatility has evaporated. I mean, we have almost nothing. Today is, as close to watching paint dry as we've seen in the market in a while, which the market's probably been due for a little bit of that, a little bit of consolidation, but in a way that's a little bit less dramatic. Throughout much of the last 3 months, we haven't really gone anywhere in the market, but under the surface, there's been a lot of movement and dramatic moves within different sectors. So some sectors have done really poorly and others have done really well. And that sort of back and forth on balance has been sort of an unchanged headline index. But today we're actually getting a little bit of that, and we're getting a little bit of an unchanged under the surface as well. So outside of a few sectors that had some earnings names, if you were to look at a heat map, there's not a lot of bright colors today. To me, that indicates consolidation and catching our breath for a little bit.
Yeah, which I agree. I think that it's not necessarily a bad stance to be in right now as far as like in the midst of earnings reports, which do typically add volatility. Obviously, the month of August does typically see some lessening of volume. But I mean, again, we've seen that the age-old adage of like some of these terms that we use
AMD back up now. AMD looking better. What does NVIDIA looking a little better too? NVIDIA also looking better. AMD.
Looking at SanDisk and Western Digital, both pulling back substantially, although SanDisk has come back on the session here a bit. Datadog also really a
NVIDIA.
The downside is that the name has been consistently.
Okay, nice move for NVIDIA.
Also has come back from
Shaking the tree, see what falls out.
Closing out the show here with Motorola, which is actually up 8%. So 3 down names, 1 name moving to the upside, all on the heels of their earnings reports. But our first mover today to focus on here is SanDisk. Now, shares are lower despite another huge quarter, with results showing just how strong AI-related storage demand and NAND pricing do remain to be. Revenue rose 51% sequentially and more than tripled from last year, with margins also expanding sharply as gross margins rose roughly 84.6%.
Oracle with SK Hynix.
As AI demand accelerated. Plus, management did issue
NVIDIA, Broadcom,
and expanded its buyback program. But of course, shares are under pressure after this report, with the street still concerned over the current supply constraints and whether memory can avoid another boom and bust cycle. And so I mentioned that we've come back a bit here intraday. And so, take this for what it is. A 4% pullback is not a sell-off by any means. These were blowout numbers, and also we're up, 444% of this year.
Yeah, these are tough ones, right? Because just the numbers, like if you're an investor and if your reason for investment is the fundamental story behind these companies like a SanDisk, you're walking away, I think, from that report pretty excited. I know that the headlines will say that the revenue forecast was underwhelming, but the reality was it was better than expected. So it was underwhelming only because the stock went lower. That said, the stock went lower. And so I'm not going to sit here and say that we know better than the market. I mean, the market is the agreement, essentially, of what the price of these stocks are at any given time.
AMD.
Look at it, though, the performance. That's where I think I'm really fascinated to see what Rick has to say about this chart. Is today we're down 4 or 5%, but over the last week we're still higher. But we're down 25+% when you look at it over the last 1 month. Yet over the last half year, we're
looking
still
good.
over 120%. Like, depending on the time frame you want to focus on, you have so many different pictures to draw for this name. It's extremely bearish over the last month. Way outside even the volatility expects for this name, which is over 100%.
JP Morgan.
It's realized 1 month volatility would annualize like 150%, which is crazy for a name that has like an established business. But when you look at it on a 3-month and a 1-week basis, pretty unchanged for the volatility. But then as you go out in time, the stock's basically gone like 30x over the last year, which, you know, how many stocks do that? Very few. How many do that in a year? Like this might be the one.
I know, and I mean, it's just been ridiculous because I know we've pulled back, I mean, so substantially from the highs here. I mean, now about 45%, but still remain up. I mean, a whopping 2,966% over the last year or so. I mean, it's just outstanding the way that these moves, even with the pullback, have been so to the upside.
Been like cut in half.
Right.
We're saying all this after the stock's lost like 50% of its value in the last couple months.
Yeah, and I know that many would make that case of like perhaps a healthy reset or perhaps an opportunity here, but we're actually seeing a very similar narrative today with Western Digital, which is our next mover, pulling back a bit more substantially intraday after its own strong quarterly report. The company beat on both earnings and revenue, with sales up 42% from last year, showing really continued demand for storage tied to, of course, expectations were lofty as shares have already more than tripled this year, and while guidance was solid, it was really not strong enough for those that were looking for some bigger upside surprise. Now, Western Digital's management did blame the modest outlook on the timing of pricing agreements, but reports from both of these memory chip makers did trigger, again, this sector-wide pullback across all AI, memory, and storage stocks, really showing how little room for error there is in this subsector within AI. And so a lot of the same themes that we discussed with SanDisk do apply kind of to Western Digital. The main difference is that Western Digital a bit more into the, I mean, SSD world, whereas like SanDisk is more of a pure play on like NAND, but again, both memory exposed, storage exposed names. Western Digital climbs right now about roughly 169% this year, and also has pulled back about 42% from highs. And I know today's move, we're down almost 11%, but we've come back earlier today, we were down almost 16%.
Yeah, these two companies, I mean, we're the same company, you know, different, you know, segments of the same company for a long time until we got the SanDisk spinoff last year. But they're not related anymore, and they do operate a little bit differently. When you look at Western Digital, though, it doesn't seem to be as, you know, positive of a story. This is actually one that, like, until recently, the revenue was declining pretty dramatically on a year-over-year basis. So to me, this was like a recovery story and then sort of a narrative story that kind of converged. That said, decelerating revenue growth, but the earnings just continue to expand as the pricing power in memory is just so tremendous for these companies at the moment. Another really interesting looking chart. Unlike SanDisk, though, bigger move today, and it's now down 13% over the last week. I mean, if you were to look at where the lows were intraday today, it's actually a low for this most recent move, which is definitely not the case for SanDisk and many of these other tech names.
Yeah, that's a good point as well. And, you know, both of these names taking a bit of a breather here this week. But I mean, again, really phenomenal runs we've seen in both of these shares, and also really phenomenal reports. But now, coming up next on today's show, we did just break down the latest earnings updates from, of course, these two AI storage linked names. But after the break, we will continue that coverage focused on SanDisk and Western Digital by diving deeper into the charts to see if today's sell-off is a warning sign or perhaps, again, another opportunity. But Next Gen Investing will be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
I think I'm gonna be sick.
We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or a bear, you want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's not time for the chart master. And today we are discussing, of course, the moves to the downside in Sandisk as well as Western Digital with Rick Ducat, our chart master. And so, Rick, let's start off here with what we are seeing with Sandisk, which has considerably come back. I mean, actually, both of these names have today, but still down, about 4% today.
Yeah, so what we have seen has been a resurgence somewhat here. And to be sure, this name is still up almost 3,000% during the past year, even with a 45% decline off those highs. So really very interesting price activity in these names, a very noteworthy sector here. Now, though, what has happened here is that after the highs that we hit, we formed a downward sloping channel type shape from which we had a brief breakout. We can see that heading into the earnings event, we did push above that level. However, then we have come back down a little bit here. Our white trend line was broken briefly, starting.
Okay, Microsoft's starting to bounce. Microsoft's starting to bounce.
1,000 or so. But now we were kind of in a bit of a mixed picture here because we have broken out of our downside channel once more and pushed back above our short-term white trend line. So now it seems like perhaps the ship has been righted and we could be continuing this upside move off of those lows near 1,000. So 1121, another relative low to the downside that we saw recently. Meanwhile, some highs here near about 14, between 1,450 as here near about 14, between 1,400, 1,500, here 1,700, and here 1,950. Those all stand out as potential upside areas of interest. When we think about our moving averages next year, the area at which we stop today in terms of our highs, fairly close.
Broadcom looks like it wants to keep going. Broadcom.
That represents one trading week here. Comes in about 1313 for right now. Above that, we have almost a confluence here. Our 63 and 21-day EMAs in gold and teal, respectively, representing 1 quarter and 1 month.
Apple
Those come in
trying to
at
turn back up. Apple.
14.85 or so and 14.36 or so, respectively. So that may seem like a fairly wide range here, but given the scale of SanDisk's price, that's pretty close together. Meanwhile, to the downside,
Apple, what are you doing, Apple?
51-day EMA
It's
representing
above the
1 year,
50 day,
coming
right?
in at 897
Apple.
in orange here. So that could be a downside area to
Above
watch
the
out for
50 day, looking
potential
for
support
follow
if we
through.
do move lower once more. RSI trending lower here. We can see that we had this trend line in play for much of the past couple. Upward sloping trend line off those recent lows has been broken though, and we do remain below the 50 midline here. So more of a bearish tilt despite today's recovery
Intel
here,
trying to push a bit
for this,
higher. Intel.
high flying name, which is still up very significantly despite some notable declines.
Yeah, and of course has pulled back.
What are we doing,
it depends on
Intel?
really what time frame you're looking at, because you could still see, like huge momentum, of course, when you zoom out. But in the near term, we have seen some more persistent pressure with SanDisk here down about 4.2%. So all that to be said now is, of course, we do pivot into looking at an example trade. Considering that this name has been really one that's been difficult to somewhat to go against, but also considering also some of the turbulence we've seen near term.
Well, Rick said it best. It's like a 3,000% gain over the last year, but it's a 45% drawdown just from the highs of the last couple months. So
Apple's trying to bounce.
investor who's just now looking at this is it's a volatile stock.
Let's see
And the
what
risk definition
Intel.
is where you begin. One way to do that is through an option strategy. And what I looked at here was, hey, the numbers seemed strong.
Consolidating
but maybe
Intel.
the reaction not so strong. And so I looked at a bullish strategy for those who maybe think that this stock should have moved higher as a result of the earnings. And it goes out to the August 21st expiration. That's 2 weeks from tomorrow, to give it a little bit of duration for that to potentially happen. But looking at a move up to 1,500 is sort of the center post. So this is a call butterfly. It's the 1,485, 1,500, 1,515. So it's got a $30 wide window where this needs to land in. You spend $1 on those, you pull that out. break evens 1486 to 1514. Where the closer it is to 1500, the better this can do. And you can see it can expand to as much as 1400. Probably not the highest probability of success, but it's risk defined, and it would benefit from a move towards that area over the next several weeks.
Yeah, and obviously just consider the fact that, as Rick pointed out, this name does trade in a pretty considerably wide range just in the last, 6 months or so. But now to pivot into our next mover today, which is Western Digital, which has seen also a pullback that has not recovered as substantially. I mean, the move today, obviously more substantial to the downside than what we're seeing in SanDisk, but we touched lows earlier today of 407 a share. So now we're back.
Gap downward here around 629. That's where the gap opened up. We never quite retested it or filled it though. So that stands out as an area to keep in mind to the upside if we do start to push back upwards again. Other upside areas to watch. A double top type high near 577 here, as well as the opening of our earnings gap near 517. Meanwhile, to the downside, our green line here representing a notable low point here that was then tested and held several times here in terms of our closing price. We did make some intraday movement beyond it. That comes in near about
Galloway Golf pulled back quite a bit.
another relative low point that we had after a previous earnings gap. That's about where we hit our low today. So you can see that these gap levels can come back into prominence down the road, even much further in terms of our time horizon here. Gaps often can be notable because they represent significant spots of price change or price activity. So they can be viewed as places to look for support or resistance here. So now when we think about our next chart setup here, Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Harley Caden, and our podcast is slowing things down. We're going beyond into the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, subscribe wherever you get your podcasts. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob. Hey, Andrew.
S&P pulling back.
Had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Next Gen Investing. Now it's time for FOMO, and today we are looking at the move in Datadog, with shares sharply lower today, even after a quarter that looked strong on the surface. And so Datadog is evidently the latest victim of its own success, with shares having climbed over 100% so far this year through Wednesday's close. But even with the top and bottom line beats and increased guidance for the current quarter and fiscal year, the expectations were perhaps just too lofty. Datadog did end the quarter with over 4,700 customers, over $100,000 in annual recurring revenue, which did also mark substantial growth year over year. But for more insights today into the details of what's driving some of today's pressure, we're joined by Sam Vadas, host of Morning Trade Live and Market on Close. And so, Sam, walk us through what's driving some of this weakness and concern today.
I think you really hit the nail on the head there, Jenny. I mean, you summarized it pretty well. I mean, first of all, you've had this massive run up. The print, you've gone highly stretched, concerned, and then, yeah, of course, you may have had some, far too lofty expectations, because, I mean, you still had 36% year-over-year growth as far as revenue is concerned. I mean, maybe that's just not enough for the street. There's a lot of scrutiny on these companies right now, but just running you through the numbers as far as what we got here, as you mentioned.
Snowflake trying to bounce.
Adjusted EPS of 65 cents.
Snowflake trying to bounce.
Revenue of 1.12 billion versus the 108 million that was expected here. So as I mentioned, that lost 36% year-over-year.
S&P back down to a recent pivot low.
So accelerating once again, reaching the high 20s percentage range.
Yeah, it feels like the markets are overbought.
25% margin, cash flow, cash generation looks pretty strong as well. Operating cash flow, 360 million. Free cash flow, 279 million. So liquidity is looking robust at this point. You mentioned they entered the quarter with over 4,700 large enterprise customers contributing ARR over $100,000 here, which is up 23% from a year ago. So the customer expansion seemingly looks resilient at this point as well. Companies said over 750 AI customers now use Datadog, including all 10 of the top AI leaders. Remembering this is a cloud monitoring and analytics platform, offers observability, and this is obviously for your entire tech stack. And, it does boast some very high-profile clients. I mean, OpenAI, Samsung, JP Morgan. Despite the strong performance, though, and the analyst reaction, the stock is falling. And I think, a few of the reasons, as I mentioned, we broke them down, could be some profit taking, given that the stock had hit these fresh all-time closing highs earlier this week. That had led to perhaps a classic kind of sell the news kind of day. Evercore ISI, I noticed some of the quotes that they had put out this morning, basically saying the initial reaction that we're seeing here seems a bit extreme, given the strength we've seen in the fundamentals here. They do highlight some of the analysts, these highly stretched valuations, as I mentioned, leading up to the report. There has been some suggestion also that maybe it just wasn't explosive enough. Maybe we didn't see as dramatic acceleration as perhaps the street would have liked the name like.
All right, Microsoft turning back up. Microsoft.
That P ratio is the valuation.
Microsoft.
6%. Just out there right now, guys.
Nice bounce in Microsoft. Trying to get back above the opening range high. Pre-market high is down below.
Really good reports aren't enough. It makes it really difficult to kind of play this game, if you know what I mean, in the sense of, if we're meant to think that the fundamental story is important.
We should have support. We got positive gamma down below.
Yeah, we're 3 for 3 to the downside. Is it just simply that everyone's on one side of the boat and it can only go, one direction from there?
Yeah, it almost feels like it. I mean, your guess is as good as mine right now. We always like to find a reason for why a stock is reacting the way it is. I mean, I think, around some of these names, it's just been really less about fundamentals, more about the positioning. I mean, going into this print, I was just looking at, the Wall Street analysts, what they were saying. I mean, they were mostly optimistic. Analysts were broadly bullish on the position here for Datadog, particularly around being a beneficiary of, corporate AI spending. I mean, it actually got a bunch of price target increases after Palantir, what we had from that company, and after the hyperscaler earnings as well. I mean, Cantor taking it to 327, Rosenblatt 305, Oppenheimer recently took it to 300 with an outperform rating. So, it's not like the market is bearish right now, but analysts still appear to be somewhat divided on the shares. There seems to be this debate around the fundamentals and that stretch valuation. I mean, trailing PE ratios, it's around 600 times. I mean, obviously a typical characteristic of, a kind of high growth SaaS company like this, maybe something to tolerate them because of the dynamics with respect to some of the expectations around, expansion and the fundamentals here. But yeah, I mean, it is a head scratcher. I mean, we know that AppLovin, of course, another software stock, very volatile. I think there's another one that's down in double digits. HubSpot's another one as well. So we're seeing some pretty hefty declines. Look, chips are rallying, whether it's part of some of that rotation, who knows? But what I would say about software is that you have seen the markets wrapping their arms a lot more around this sector more recently. I mean, IGV is down today, but what we have seen is a kind of environment, particularly in the last week or so, where you've had sort of an everything rally across hardware, software, and even the Mag 7. But it certainly seems like people are picking the winners and losers. But I would say there seems to be some talk of, a bit of head scratching going on as to why such big double-digit declines in a name like this off the back of what was a strong performance here. Yeah, and I'm so glad that you said that because I could not agree more. I mean, frankly, I looked at the numbers and thought this name was higher because of how strong they were. So it's interesting to gauge what seems to resonate and what seems to point to the opposite, which today, unfortunately, for a lot of these software names, seeing more of that pressure. But really appreciate it, Sam Vadas, for bringing all of the insight into what is driving, of course, a 16+% pullback in Datadog. And so as we now look to trade this name for example purposes, I mean, I will say that we were on a really nice run going into this print. This name is still up 74% this year, now having pulled back from highs by about 19%.
Yeah, and it's been volatile around earnings. Just a lot of times the volatility has been the upside for this particular name. But it has in the past moved in the same direction post-earnings after the earnings release. So if you look at the last quarter, huge gap up, and then that kind of sparked this run. So perhaps the same type of thing happened just the other way around was sort of my thinking for this example trade. And if you went back to the later parts of June, the lows of the most recent downward that we had seen in Datadog was around 210, just over that level. So what I looked at was a bearish trade that would take place over the next couple of weeks that would target testing those potential lows. So it's a 210 put calendar. Most importantly, it's risk defined, Jenny, but it sells next Friday. So not this Friday, but next, the 14th, and then buys the following week, the monthly August 21st. And it does this for $1.50 debit. So you have a defined risk on this of $150 is your theoretical max loss. And the nice thing too is it's customizable. So for the trader or investor out there that has a totally different opinion and thinks the stock could recover because the numbers were strong, there's likely a bullish call calendar that could fit that billing as well. But this is the bearish look, kind of leaning into recent activity in this game where it spikes up post earnings or lower post earnings, then move in that direction for the next couple of weeks.
Yeah, we'll continue to watch this one and see if we can stage any sort of recovery here. At least, I guess we've limited time left this week. We'll continue to follow some of the volatility that surrounds all things the Datadog as well as just broader software earnings. But now up next, stocks do keep pushing higher, broadly speaking. But can this rally survive higher rates and high valuations? Our next guest will also discuss several of his stock picks, including GE Vernova, JP Morgan, and Nvidia. We'll be right back.
S&P keeps pinging this low. Looking for a turn, but it's not confirming yet. The hedge flows are staying down here. Maybe the evening session after 2 p.m. we get the institutions to come in.
Good afternoon. Federal health officials have traced a multi-state zone of Jalapeno in Sinaloa, Mexico. At least 345 people in 27 states have become sick, with 36 hospitalized so far. The distributor has recalled those members watching what they can over and remove them from the rest. Uganda joins Morocco, pledging troops, though opposition lawmakers are questioning Allah's motives and the force's role. And European soccer leaders are still threatening to boycott FIFA events even after FIFA apologized for trying to sell ownership stakes in the World Cup. Officials say FIFA has not fully dropped the idea or promised it will never happen again. They also say they've lost confidence in FIFA president Gianna Infantino. Kelly, back over to you.
All right, latest chapter in that saga, Frank. Thank you. Coming up, how important is tomorrow's jobs report to the Fed's next rate decision? Probably pretty. We'll get a preview from an old data provider. And as we head to break, listen to what JP Morgan's Jamie Dimon told us yesterday on the Fed's path forward and its new chair.
If there's inflation, they will have to fight it. It hasn't changed very much lately, and it's been over 3% now for 5 years. I think the world has kept more. I think it makes tremendous sense for any of you leaders at Fed. If you give anyone a job, take a step back, look at it, think what you did, how it should be done. That's the job of a leader, and I think he's doing the right thing.
Pretty slow evening. I'm just scanning through, taking notes, scanning through stocks, watching Microsoft ABCD pattern potentially. Nvidia bounced a little bit, but no follow through. Same thing with Broadcom and Snowflake. S&P just keeps tapping this low. Yeah, we need a nice big bounce here.
Okay, so Friday's jobs report could also be a major catalyst. And so what would you consider the ideal outcome then for investors, and what would be your major concern?
Well, the good news is the Fed is not hawkish, the Fed is not dovish, the Fed is data-ish. And so I think Warsh has been tested, and that's why we're going into this current market rally that we have. But a surprisingly strong jobs report that pushed Treasury yields higher, put pressure on a lot of these growth-sensitive stocks. And so the best report is exactly where we are. Flat, benign, no increase in the jobs picture at all, no decrease in the jobs picture unemployment-wise. So if we get a benign event, that would be the best thing for the markets at this time.
And in that
context, assuming that's the case, sort of more of the same as it start for the next foreseeable period of time, would you be using that opportunity to kind of, as you're saying, being selective with the portfolio, but maybe creating, maybe reducing positions elsewhere, creating that opportunity so that you have cash ready if you get that pullback? I guess I'm just wondering what we're doing to stay invested but remain selective at the same time, how we're actually achieving that.
It's super intelligent to have some dry powder on deck right now to apply into the dips. And we do that because we do anticipate rates to be a little bit higher, maybe going into the fall, even organically, if the Fed doesn't do anything. We see the credit markets pushing up rates due to the inflationary aspect of what's occurring. So, the Fed's not being.
There's just no volume here, it looks like. If we don't get any volume after 2 o'clock, we're probably going to fade some more. I would definitely look into these put flies.
Okay, and so your stock picks do span across things like AI, power infrastructure, and traditional banking. And so what is really this common thread that ties names like NVIDIA, GE Vernova, and JP Morgan together in your portfolio today?
Well, the three picks that I have are not obviously to abandon technology, just to broaden beyond technology a little bit, but I would combine NVIDIA for computing, GE Vernova for power infrastructure behind AI, and JP Morgan for exposure to a higher rate economy, because rates are going to stay higher for longer, obviously, for many reasons. But you want to own the chip, own the electricity powering the chip, and own the bank financing it, and the economy around it. That's how you broaden today.
That makes a ton of sense. It ties into what you said about focusing on the massive capital cycles, but also looking for cash flow positive businesses. Within a portfolio construction, looking for maybe things that are inversely correlated or correlated differently or not correlated at all. Do you look beyond equities? Do you look to things like precious metals or fixed income? Do you look to within equities, things like healthcare or energy to shore up the portfolio? Or do you really stick to those key themes that you talked about, capital cycle and cash flow positive?
Well, I think all of the above are applicable at this time.
Okay, we're trying to bounce here.
The one particular side of the equation, but having some fixed income and having some metals would be intelligent. How much metals? 3 to 5%. How much fixed income? Potentially 20 to 30%. Hold back 20, 25% in cash or more to take advantage of the environment that we have, because we are on. So there are shifting sands in the markets affecting all three of those investing dynamics right now.
Okay, so say being more selective here, what are specific characteristics that you find important when, say, assessing opportunities or assessing maybe a company going into its earnings?
Well, I think earnings growth is really, really important. Earnings guidance is more important at this time to give us, because we really have to perform better in guidance than what was expected or what the street's anticipating. To see share price appreciation go up or to catch up to current valuations. So that guidance is really the best marker to determine what positions you should have today, in concert with what has been the growth quarter over quarter, year over year. But guidance is the perennial winner for what you should be buying today.
Okay, thank you so much. So appreciate your time today and great insight into some of the drivers of course, this back half of 2026. Jeffrey Small, partner at the Retirement Income Source. Now, up next, Motorola shares are jumping over 8% after a strong beat and raise quarter. We'll break down what drove the move from its record backlog to margin expansion and stronger year guidance. Stick around. Next Gen Investing will be right back.
All right, so S&P is sitting here. I just added some SPY put flies. Okay, I have these. I just added 755, 755. We don't feel like, it doesn't feel like we're going to move out of this area. 755.
Delivers real-time market insights live from the NYSE, NASDAQ, the SIBO, and beyond.
745, 735. These are cheap. They're 55 cents each. These are purely hedges.
First to find out what's shaping early market action. Tech check, options corner, future
for 55 cents.
Covers it all. Grab coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on Schwab Network.
In the meanwhile, I'm trying to reduce my exposure in tech at the moment.
Any device for free. Stay connected to what moves markets. Download the Schwab Network app.
Accent just drives me crazy.
Just chatbots. They're agentic AI tools. They're agents you were talking in the last segment. So they're things that you're actually seeing happen in the market that's actually impacting the way and the process by which people found jobs. But yes, tightness of the job market, Steve.
Okay, so let me just spin that forward then. It's also saying that the data itself is a little, we have to be careful about what the data is showing us, that the Kelly, I think, nailed this. It's the yield on the ad that has changed, not necessarily, but also the tightness of the job market. So are you seeing that in any of the wage data? Because we did get very positive wage data, both from Bank of America Institute, as well as ADP, that showed that the a 7% year-over-year wage increases for those who are moving jobs and in the ADP data. So that also suggests tightness in the job market. So when Kelly asked at the beginning of this segment, does this matter for the Fed? That's the thing that's going to matter for the Fed. But I will point out before I say that, because, you know, two-handed economics here, the productivity numbers were good today, as were the unit labor cost numbers. So go ahead and take that away, Evan.
Yeah, I agree with you. I think we saw a 2% wage increase on some of the jobs themselves. I'll give you another interesting statistic. There was a pre-chat GBT, anyone who had AI skills, there's the 2%, actually had a 2% premium on their wage. That's gone. So having AI skills, whereas yesterday or a couple months ago was actually you came at a premium from a wage perspective, that's actually been flattened. So I think the expectation is now that you actually have these sorts of skills.
All right, and then we'll end it here, Evan. I'm sure there's 27 different Kelshi contracts, but what's going to happen with the jobs report tomorrow? What's your broad?
Yeah, so we're showing about 79,000. So pretty much in line with consensus, higher than ADP, but still we're not returning to back to where we were, but certainly not doing well.
All right, Evan Stone, Steve Leisman, thanks. Appreciate it. Coming up, a trade that may not be on your radar, but has done really well this year. It's tankers. International Seaways is up close to 100%, but there's something else the industry is watching really closely for disruption now, and it's not the Middle East. I'll tell you next.
All right, I added these puts. Oops. $74, $74, $745. I hit the wrong thing here. $735. All right, so added these puts for $55 per contract. Again, it's a hedge. 735. 735. Okay, so I added these here. All right. Just in case we pull back, we're not holding up very well. I have quite a few longs. All my positions are longs. Still got too much tech that I would like to reduce risk in. Still have too much tech. We could see a couple of days of downside, maybe a bounce. Hopefully we'll just stay in this area, but like Intel, I'd like to reduce my risk in Intel. I've got Broadcom, I'd like to reduce my risk. Actually, I'd like to increase my risk in Broadcom. Perhaps take NVIDIA, reduce risk in NVIDIA. That's not really doing much. SK Hynix, I might do something there, might reduce risk there. So it looks like Broadcom's showing the most strength at the moment, so I'd like to add to Broadcom.
Welcome back. Price of oil is coming down. It's at 77 today, on pace for back-to-back weekly declines, while our attention is still on the Middle East. The shippers and oil tankers are keeping an eye on another choke point that's emerging closer to home. Pippa Stevens has a closer look. Pippa?
Kelly, we're talking about the Panama Canal, where next week more weight restrictions go into effect to preserve water ahead of what some are calling a super El Nino. Now, this could prove especially disruptive this year, given that traffic through the canal is up 12%, according to FIMCO, amid disruptions in the Middle East. Now, it's especially true for fuel products. Diesel, gas, jet cargoes up 40%. LNG transits up 74%. And the canal is now at overcapacity, which has pushed auction prices for available transit slots to record levels, according to Argus Media. Average rates for the larger lots hitting $2.5 million, with some individual auctions north of $3.7 million. That's usually more in the neighborhood of $100,000. Now, Argus's Ross Griffith telling me, because of these high fees, we're starting to see more ships going around the Cape of Good Hope instead. That adds at least 3 weeks to transit time and increases those fuel costs. Longer trips require more ships, which also increases freight rates. Scorpio Tankers, International Seaways, TK Tankers, and Form all seeing big gains here year to date, all up more than 50%. But of course, Kelly, they're doing well, but that adds to inflationary pressures on the consumer side.
Yeah, I mean, and is that the super El Nino? Is that why, again, these rivers and the dryness we're hearing about in Europe and cruise ships can't get through? I don't know. The humidity outside, I guess it's easy to wrap it all up into one. More importantly, the Iran situation is still hanging over all of this. So I guess if the hope was that we could divert flows away from the Strait of Hormuz, this is a reminder that other waterways bring problems too.
That's right. This is just another choke point that's now under pressure after Hormuz and the Bab el-Mandab. And Hormuz and Bab el-Mandab are much more impactful for the VLCCs, for the pure oil trade, given that VLCCs can't pass through the Suez Canal or the Panama Canal fully loaded because they are simply too big. But for the product side, and that's really where we are feeling the strain of these very tight markets, those ships are smaller, they're more flexible, they can transport multiple cargoes in different tanks of one ship. And so those are kind of the ships that can move around as needed and rely on transit points like the Panama Canal. And also this speaks to these shifting trade patterns. So now the U.S. Gulf Coast is sending products to Asia in a big amount, really the first time. And the point, kind of the overarching point here, is that you have the same amount of product that's moving, but it's moving longer distances. And that requires more ships, because if you're moving 1 million barrels of oil under a ship, you know, your transit time went from 16 days to 40 days. Wow. That requires almost 2.5 times as many ships to move the same amount.
And more fuel. Which
exactly. Exactly. And that's all baked into the cost.
Pippa, thank you. Pippa Stevens. Coming up, the interns have spoken at Morgan Stanley, at least. The results of the firm's new survey show footwear fragmentation is real. We've been talking about that this summer. And there's one clear winner. They say you're looking at it, but the chart is lower. And our retail guest said earlier this week, this name is a short. We will reveal it next.
All right. All right, let's see. We're just hanging here. The longer we stay down here, the more nervous it would make me if I had no hedges. I hate going into a close with the thought that we could have a big move tomorrow, the next day. I don't mind if we move higher. Higher is good. I don't mind the hedges blowing up on me. That's fine. I just don't want these longs that I have to have too big of an impact on the negative side. All right, we're starting to bounce now. Good.
Welcome back to the exchange. Earnings from Nike, Adidas, and Deckers are in the books and underscoring a growing trend of footwear fragmentation. Casual is definitely cooling, but performance sneakers are still a bright spot. One company that's grabbed market share in both categories is Deckers with Hoka and UGG. Tomorrow we get Under Armour, next week On holding. Based on Morgan Stanley's latest survey, On remains in a class of its own, at least according to the 530 interns they asked. For more, let's bring in Alex Strayton. He's an equity analyst at Morgan Stanley. Alex, sorry. So On this stock that just earlier this week, one of our retail analysts said he would be shorting because, well, look, we all know how much hotter can it get, right? What are the interns saying? What is the state?
All right, Intel's starting to bounce now. All right, S&P is coming off the low here, so that's good.
Picture on the footwear landscape right now, which the survey spoke to quite nicely, which is this.
I realized I bought those put flies. I bought them right over here, and the market's moved a little bit lower. I would really like to do something higher up. So
Lower margins, lower multiple, more volatility.
I don't like buying puts at the low of the day, but these are so cheap.
And so we did see that.
These are so cheap at $50 per contract. If you can get them for 50 or lower.
Thing that did stand out was On, to your point. It was a
755, 745, 735.
number 2 ranking as it relates to all the brands surveyed and improved 5 times more than any other brand that was surveyed. So quite a strong output there. I think it shows some of their efforts to strategically recruit younger consumers, which are very important when you think about brand heat.
Yeah, because when it's been a while now that On has been the hot new thing. So you have to imagine everyone's going after them. And when the analysts warned us about, look, these trends will ultimately shift. So it was fascinating to see your intern survey at the same time, because you think that might be where we start to see the shift. Maybe it's not here yet. Is there any sign of the next thing? Could Nike make a comeback? Adidas? I mean, there's so many brands that have been watching On and probably thinking, and Hoka, yes, and all these kind of performance footwear categories. Any sign that things are starting to shift away from On?
So look, we've been more negative on these legacy brands prospects for maintaining share. I mean, almost every single one of them is in some form of a turnaround, whether it's Nike or Under Armour, you name it. They're all battling these premium niche brands that are almost biting at little pieces of the apple in different sportswear segments. On and running, some in tennis, some in hiking, that you see it everywhere with Arc'teryx, even Lulu and yoga. It's just been a developing trend. I think the survey reflects that too, of not having so much optimism around some of these major brands' ability to offset this fragmentation. Nike hit a survey low, saw the largest decline of any brand in the entire survey. And that's really important because North America is where they say their turnaround is supposedly furthest along. And so I think, this response, look, it's a small subset, but I think it just it underscores how much further there is to go. And this is typically a leading demographic group as I think about brand momentum.
And same with Lululemon, right?
Yes, exactly. Definitely with Lululemon. And we saw a relatively challenged result on that brand too within the survey. It was a third consecutive year of share declines. Also hit a survey low similar to Nike. And I think, look, turnaround efforts are clearly not having traction with this cohort. This is a very specific age and demographic. But as it relates to our thesis on the stock, I think it certainly supports the view that their prospects in the Americas business are challenged, and that declines could be deeper and longer than the market is currently discounting.
Okay, Apple turning up.
There's no way to play Viore, is there?
No, I think when I speak about names like Alo and Viore with investors and with my clients, they come up more so in the context of the Lululemon thesis or even Nike. But I often ask people to take a step back that those really aren't necessarily the scariest athletic competitors. I think what's a scarier development and what's creating some of this fragmentation is the fact that regular way fashion players, think Urban Outfitters, Free People Movement,
right.
American Eagle's offline brand, they're getting into the activewear category in a world where we used to only be able to shop at brands like Nike or Adidas.
Yeah, now you walk into every store. That's what you see.
Exactly.
Alex, thanks. Appreciate it. Alex Fraser, Morgan Stanley. And that's it for us. Jane, I'll see you on the other side of this break. Power Lunch. Don't go anywhere.
Alrighty. Nvidia's starting to turn up, so we might get some opportunities. I would really like to take a little bit more exposure off. Like I said, Nvidia, I would like to reduce my exposure. It's got earnings in a couple of weeks. Apple, I'd like to reduce my exposure. I just feel like this is going to pull back a little bit more. Not because it's bearish. It's just that we've run so far and we're at all-time highs. We just need to pull back a little bit or consolidate. We don't have to pull back. We could move sideways. But I would just like to see a little bit of, take a little bit more risk off the table. Because I have entirely too much in tech right now. And with Core 1M where it is, that's very risky. We could wake up tomorrow and everything be down 5%, you know. I don't want to run that risk. I want Core 1M back above 8. The caveat is there's a lot of good earnings. We have good earnings and good forward guidance. So who do we have tonight? Who do we have tonight reporting? We have, let's see. Tonight, whoa. Okay, Warner Brothers Discovery. We've got ConocoPhillips, Celsius, Apache, Qubits, Peloton, Datadog, Pinterest, Hertz. 20% on Hertz, huh? HTZ. Let's go take a look at that. They're looking at for 20%. HTZ. Oh, 20% isn't that much, right? It's $3. I mean, percent is percent, but $3. It's not like a $50 move on Microsoft or something. Microsoft was crazy, crazy, crazy. That's why I got out of those call flies or call spreads for earnings. I mean, that's $30 in the money. Very strong price action from Microsoft. Still, we've got a lot of, all of these positions are still very high priced. Calls are very expensive. Oklo, put flies, put spreads, Netflix. It's got a risk reversal, 95% risk reversal on Netflix potentially. Apple, that's another reason why I want to reduce my exposure in Apple. It's above the 50-day. I just want to see this implied volatility drop off a bit, so it won't be so expensive to hold on to these calls. You're paying up for these calls. Anything in the far right side of the screen, you may inadvertently, if you don't know this, you may inadvertently be paying too much for the calls. So any move, any spasm in volatility, any drop, these calls could get crushed and still be very bullish. The implied volatility comes out. So I want to reduce that risk. I know I've been beating this to death, but it's on my mind. NVIDIA. All right, NVIDIA turning up. This is looking good. All right, so the S&P is on the move now, S&P. Okay, so far so good, looking good here. All right, so S&P, can we get something going? It's 205. S&P 500. All right, looking good here. Okay. All right, NVIDIA is trying to push a bit higher now. NVIDIA. All right, higher low, higher high. Looks like we get back to VWAP. Spinning top wouldn't be surprising to stay like that today. So if you missed the turn, I wouldn't be buying it right now per se. Again, NVIDIA, if it pushes higher, I want to reduce my risk.
How far they've run, slight misses, means uncertainty.
All right, NVIDIA looking pretty good here. Should get back to 221. That's the pre-market. PMZ. 221, that's up here. 222. 222, pre-market zone right up there. Pre-market highs. Looks like that's where we're headed. SK Hynix, okay.
Anticipated day for SpaceX, August 6th, being the first.
All right, what's Home Depot doing? Home Depot, we got a bounce at all? Yeah, a little bounce. Intel, looking for the bounce. Not yet. All right, we're still trying to get something going here.
Everyone is going to be selling up at 900 million. Some people are going to be longer term, but the volume that's trading in SpaceX, it makes it.
Excuse me. Okay, Microsoft trying to continue. Microsoft looking pretty good. Back up to the opening range high. Microsoft's back to the opening range high, showing strength.
Watching this market, there's a lot going on here, yet the market only down about 1/8%. Nicole, the Nasdaq that was down much more to start the day has actually really been this day that started out with an up market and then a pretty significant sell-off
perfect overall. We anticipate a number of that's going to be pretty important for this market.
Yes, absolutely. Waiting on the all important jobs report tomorrow. That will go through tomorrow. Kevin Hayes, thank you. Together. Coming up, we'll spotlight tech and talk to the CEO of American Semiconductor. Reported its quarterly earnings yesterday. Much more to come here. Big moves. Rick Ducat will show us real options trades for Salesforce, ASP Technology, and Whirlpool. So much more when the watch list returns right here on Schwab Network. We're down 408 on the Dow.
All right, Microsoft trying to go here. Watch Microsoft.
You can bet on this and win. You can bet on this and lose, this and win, this and lose, this and lose, this, lose, win.
All right, looking for Microsoft to follow through.
Lose. Betting isn't investing. Investing is owning. It often rewards patience and discipline over shots in the dark. The long run belongs to those who invest in it. Own your future. Don't bet on it.
Real-time access, data-driven analysis.
Microsoft looks good.
Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Netflix turning. All right, starting to see New York Fangs catching a bid.
Welcome back to Watchlist. Let me go deep on American.
New York Fang components are catching a bid here. Let's see. Okay, you can see the doji.
It's great to see you. It's wonderful to have you on. I saw your record revenue and strong orders in the first quarter. Tell us a little bit about that, and welcome to the show.
It's great to see you again, Nicole. We surpassed a whole new level, record level of revenue in the quarter, $90 million. This represents 30% year-on-year growth. And additionally, the first quarter for us, it's our first quarter of the financial fiscal year. We delivered really exceptionally strong.
All right, looking good.
More than $130 million, which really reflects the strong market. So we're really at a
All right, I bought some calls for tomorrow. 77.25. Okay.
this year, and we're only a few months here into our
SPX. All right, so just being patient. The pullback is what it is. Okay, these are 44 deltas.
Semiconductors or mining. We see very strong health and strength in the pipeline there, as well as in
Got green really quick.
But this $25 million order allows us to put together a lot of complementary equipment that the company makes and be able to help a utility that we've had a very long relationship with. So this $25 million order is the largest order for a mining project in company history.
Yeah, you mentioned the backlog, the 12-month backlog exceeding $300 million, the total backlog of over $400 million, and the $90 million, surpassing $90 million in quarterly revenue. That's represents 30% growth year over year. So as you see strong demand in the materials space, mining, as you just were referring to, the continued strength, what will continue to drive numbers like these going forward?
I think it's a lot in industrial materials, a lot with utilities for us, a lot in traditional power sector. So the company has really expanded the markets that we pursue. We've expanded the amount of content we provide per project. Those all translate into a diversified set of market sectors we focus on, which spells multiple pathways to growth. So we're in probably the best position the company's ever been to be able to grow to new heights. And if you look at last year, our order book we brought in probably 75 months per quarter. Now we're above 100, even with this large order, if I take it out. So we're at a new level. This is a business that really tracks with capital spending in manufacturing, in materials, in semiconductor, in spaces that we see are
Look at data centers. You're progressing with additional data center opportunities. I'm sure that's getting updated regularly. Where are we now with that?
All right, New York Fangs look good. More bullish than bearish. We are consolidating at the highs. I do have hedges on. I just bought some calls for tomorrow. If those move up 50%, 60%, I'll take them off. Okay.
So this is another area for us to start to pursue. I know investors can be up and down where this market's going to be and how big it's going to be. But if you look at the demand for electricity, that's only going up. The reliance on electricity is only going up. And we're in a unique position to be able to solve those problems for people that we know really well, which are the engineering construction companies that help build their customers.
Okay, nice little move here in the S&P coming off the low. Okay, we're starting to return the corner, looking good.
Spoke about a short time ago that setting a record. And I think about some of the other needs and growth going forward. Tell me where we see more demand versus less demand, because there's mentioned energy, we talked about data center. What other opportunities are there? What will drive the biggest mining, semiconductors? It certainly sounds like the need is there based on the fact.
Yeah, there's a general investment thesis to get out of China with supply chain. So it's a need for more materials, it's a need for more chips. There's a need for power generation, and even for LNG and things like that, distributed over pipelines. Those are all areas that play for us. So those are probably the biggest sectors that are going to drive us in the coming few quarters. Really in this material area for us, which is mining and semiconductors. And additionally in kind of traditional power, traditional energy, as the investments there are so strong.
Guidance, I saw here expectations that for 2026, company expecting revenue going forward to exceed 85 million, GAAP net income to exceed 1 million. There's some good guidance here as well, but I also wanted to ask about guidance, but also about what you provide. Kept using within the language here the simplicity of what it is that you do. You somehow bring power and do it simplistically, efficiently, simplify execution, you can avoid costly grid upgrades, you reduce the project complexity. I want to hear a little bit about that and the guidance.
So we put a lot of the electrical substation equipment together in a factory and delivered in a box really easily. So rather than doing a lot of civil works on site, as you have more need for power, even for manufacturing capacity or just general electrical power on the grid, you need to build the infrastructure. And that could be put on the side of the industrial concern, or it could be put on side of the utility. So we lower risk by being able to have all the components factory shipped in the box, kind of the size of a 56 foot trailer, and you're basically ready to plug in most of the substation. So it reduces siting, it reduces complexity, reduces risk for the customer, and they get something ready-made, ready. How well we can engineer and manage the thermal loads that come off of this equipment, which allows us to put things closer together, make things more energy dense, which therefore makes it simpler to be able to make this.
All right, and I saw here another headline on the guidance expecting revenue side. Okay, well, Daniel, again, congratulations on your largest quarter ever, record revenue that you saw, strong orders. Yes, but many things.
All right, MV, everything's starting to turn up now, so giving me an opportunity to exit some of these positions for a profit and reduce risk. Let's see, I have 14. Okay, so I want to take these NVIDIAs off because these expire next week. These expire on the 14th. That's Friday, right? Yeah, that's Friday next week. I could hold, I'm going to hold on to these a little bit longer. NVIDIA, nice turn. I want to get a little bit more profit out of these. Okay, I have the 220s, so these are going to be fine. Also have 225, 227 50s. Okay, NVIDIA. I'm about to reduce some risk here on NVIDIA. Let me put in a limit order, so if I forget, let's see, create a closing order, sell for $1.25.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, how it's going to impact. Watch live, Schwab Network, Schwab.
Okay, looking good. Microsoft trying to break above the opening range high. Broadcom's trying to break out. Broadcom. Snowflake looks good. We got Tesla, Netflix, NVIDIA. Everything's turning except for Amazon and Google for now. I would like to reduce some risk in Google, but those are out of the money right now.
This is Fast Market, built for traders.
Oh boy, getting old. All right, NVIDIA looking good. NVIDIA. Elf. Fire trucks. Somebody must have got hit by lightning. Oh boy. All right, nice follow through. NVIDIA looking pretty good here.
In the world of tech here, and that we're looking at ASX is ASB Technologies, up 6% this month, over 130% year to date. Let's talk about the upswing we've seen here, and more importantly, the trade you found. And I saw recently at the end of July, it had better than expected.
Yes, another semiconductor company here, perhaps a bit lesser known, headquarters in Taiwan. This is a company. So they can be linked up with other components, and then they test them as well to make sure they work properly. This was a very curious type of trade, I thought, though. There's not really a name that I know of for this type of trade. I guess you might call it perhaps an unbalanced strangle, because they were buying the 55 calls in the March 19th expiration, but also buying the 30 puts in that same expiration, but at half the quantity. So plus 10,000 of the 55 calls, plus 5,000 of the 30 puts. Again, both opening trades here, both done, at the same time here as a spread. So this trade would be looking for a big move either way, with more of a bias toward profitability on the upside, the call side there. Again, quite a hefty debit paid here, $7.16 million debit paid for both of these long options here put together. Max profit would be unlimited potentially here if we do include the long call side. So this is also rather curious too, is that this is a trade that needs a bigger than expected move in either direction to even reach profitability. Expected move. Trade that is making make the sizzle 6.3.
Okay, last but not least, let's take a look here at Whirlpool, abandoning the global ambitions. Now back.
Meta's a bit higher as well, looking for higher high, higher low. We just got the higher high on NVIDIA. Meta looking for a higher high and a higher low. Looking for that higher high now. Take out this high right here. Meta.
Yeah, so a company many of us are probably familiar with, maker of household appliances here. But jump after earnings, that was what we've seen recently here. But, as you said, Nicole, this comes after being in the doldrums of these 52-week lows. So this trade is looking for perhaps more pain to come, though. Plus 15,370, November 20th, 30 strike puts at a 90-cent debit here. So a very large quantity of these options that are
S&P 500. Active VWAP so far looks good.
6 days to expiration. $1.38 million is the max loss, which is the debit paid for this trade here.
Doji day for now. S&P.
$7 million. So again, this is a trade that would need a
They're looking for a follow through. Let's see what S&P hedge flows look like. All right, we're trying to get this to trend higher now. With an hour and 28 minutes to go, an hour and 27 minutes to go. Market's pushing higher.
Get full service wealth management.
Invest your way with Schwab.
This is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Mom, when my grandparents were given, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally missed. Schwab has been with us for 25 years, through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Market moves, earnings breakdowns, and trade-ready insights. Follow me on @Sam_Vardas and connect with me on LinkedIn or Instagram. Welcome back to the Watch List. I'm Nicole Edelman. Breakdown the latest earnings report from Schwab. Tony's Apartments with me, CPF. Robust gross payment volume growth, their earnings beat. The stock has hit a 52-week high this week, though it's pulled back now, down 5%. Formerly Square, we use the ticker symbol XYZ for block. Some of your thoughts here, Tony. What do you make of it?
Yeah, absolutely, and thank you for having me. Working with the report, there's three main revenue drivers that it's basically buying out family, which is fantastic. It beats both top and bottom line. GAAP earnings, a little weaker, but it appears that that's really just from some layoffs and infrastructure and things like that. And so overall, I'd say the earnings are very good.
All right, looking for more upside. S&P is up just a little bit of a fade at the moment. Off of the high, we hit VWAP there.
It's looking like it want to give up a little, and maybe go back down right into the 70s or 60s.
The buying opportunity there because it says something that's, but we do like it. Is that right?
Absolutely, and I think a lot of whether it's what your outlook on the individual consumer that is more price sensitive and savings sensitive space is. I do like it compared to competitors, like a firm that have a lot more exposure in that space, because obviously the payment process.
Okay, we still got a doji day. Microsoft just taking its time. Meta back up. Intel's trying to bounce. SK Hynix trying to bounce. Number of stocks advancing. 187. That's close to the best level of the session. 44 on the Qs. Core 1M is hovering around 7, just below 7. So we need Core 1M up a little bit higher.
I think in the catch up, I mean, the catch up was the story for this company years ago.
Okay, S&P fading a bit more now. Apple. Oh, still very negative signal. The weighted signal is still very negative. Sell signals up high. All right, pulling back now.
If the market's telling you they like it. However, it could get back and kind of find support right around that.
Futures fading. Nice little push up to the highs and then selling into strength.
The analysts here, all targets, I see 105, 97, 100, 107, 103, all these targets, 98 EPS. That's on top of the list here as far as time.
Apple sitting here. Do I want to take any Apple off? Let me see here. Apple. Got a small profit in Apple. I got Friday calls. No, November. Okay, November. Home Depot. All right, kind of a choppy day, right? We got a doji day. So if you rode this from the high of the day down to the low and you sold at the low, now we're moving back up into the high. If you're chasing it off the low, you're just looking at it. You're looking at a doji basically. So there's no need to chase it right here. We're probably going to consolidate. Worst case scenario, we pull back towards the 90 MA or the 21 day. All right, and it looks like we might get a bounce here.
Trading at Schwab is powered by Ameritrade, unlocking the power of
Really, I was just talking to my wife about, she said, why are you in a good mood? I'm always in a good mood. But trying to explain to her what a doji day was. Looks like an English cross, the English cross. She used to live in England. She knows what I'm talking about. The English cross right here. Doji day. So anyway, we're right in the middle, right in the lower half at the moment. We need to see a little bit more upside, I guess.
Street, such as the S&P Russell yesterday intraday, the Dow closed at a record. But today,
Microsoft keeps trying to push higher. Microsoft. All right, Microsoft trying to bounce. It bounced, giving us an A, B. Oh, it's only 15 minutes. No wonder it looks weird. Okay, let's look at the 5 minute. No wonder that looks strange compared to everything else. Ah, there we go. Okay. Okay, A, B, C, D pattern. Here's A, here's B, higher, low, C. Looks like Microsoft wants to go.
Biggest culprit we would say is the ongoing shift from actively managed funds over to passive index funds. This is having kind of two effects. First of all, it disproportionately benefits some of the largest components of the index. And when you look at the S&P as an example right now, it's very technology heavy. These are great companies, but they tend to be
Higher, low, C. Looking for a follow through and Microsoft.
Tilt to that. But as money's moving to these index funds, it's having an effect.
Okay.
They kind of absorb more and more shares off the market, reduce the supply. It's almost creating like a short swing effect. Then, though, as money has shifted, you've seen the rise over the last few years, the rise in popularity of momentum-driven strategies, the increased use of stock options, leveraged ETFs. Now, all of these, when you layer them on, is having an effect of kind of exacerbating the volatility. And so we're kind of seeing where the market is, has pretty big runs to the upside as these processes build almost like a snowball effect. But if that reverses to the downside, it kind of works both ways. And so then, we get these periods where we have some pretty severe, pretty sharp downturns as well from it. So it's more endogenous almost as kind of the way money is managed, it's shifting.
we did see, for example, I'm thinking about the triple Qs, for example, right? That pulled in nearly $5 billion in a day on the 5th of August.
77. Did we run into 77.25? I wasn't paying attention. 77.25. No, not yet. 77.25 is up here. Okay, let me pull this down. 77.25 is where we're looking at present. 77.25. 77.25. All right, so that's where we're targeting for now. In between levels, we held the 7,700 level. Looking for a higher low.
That utilizing systematic trend following approaches is an ideal way to approach risk management in these markets. The reason being is that the more volatile an asset or an asset class is, the better it works to apply systematic trend following to it, where when these processes are building and you get really large uptrends, you want to try to jump on that and ride it as long as you can. Hopefully then exit as things turn and try to avoid as much of the downturn as you can. So as these processes are making the market more volatile, it seems to be working, increasingly better from that perspective of utilizing kind of a trend following approach. So we launched the ETF, PRTO back in the spring. It is Morningstar would classified as a tactical allocation fund. I like to think of it more as a risk managed growth fund. But what it is we're applying systematic trend following to a core subset of asset classes with the primary focus of trying to reduce as much of that downside risk as we can, the left tail risk of the return distribution to compound with a smoother path over time. And so, again, we've been leaning more in this direction. We've been running these strategies directly in client accounts and SMAs for almost a decade now. But we're increasingly leaning in this direction as these dynamics are kind of making the markets more volatile.
So explain what this tactical allocation fund actually does to design and reduce downside risk exposure and still maintaining the upside return potential. Where do you see the upside? Because you're looking at trends and making adjustments as such. That's what you told me. So that being said, as markets are changing, what upside return potential do you see? Where may be the bright spots for this market?
It's an interesting question because we try to remain a little bit more agnostic in terms of when you're utilizing trend following. You're doing more of just identify in real time where the trends are, and you want to try to ride it as long as you can. And so, again, trying to maintain that asymmetric profile of ride the upside without capping it, having that cap.
Okay, Hertz for earnings. Hertz for earnings.
Turnover is relatively minimal, maybe once or twice.
Okay, so Hertz, they're looking for, let's see, what are they looking for, Hertz? Hertz.
Nick Lump, thank you. PRTO, we'll keep an eye on that. RCN Wealth Advisors President. Thank you, Nick. Coming up, we'll check in on the very latest with Bitcoin, Ethereum, and more when it comes to the crypto report. We'll be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, 100 branches, all at your service, all so you can invest your way. Sounds nice, right?
Welcome back to the watch list. Taking a closer look at Bitcoin, Ethereum, and more in the crypto report. Let's welcome in Adam Lynch, Director of Equity Research at Charles Schwab. Glad you're with us. I was just looking at 1 month returns, Bitcoin up about 3.5%, and Ethereum up nearly 10% in 1 month. What has driven crypto a little bit higher? And I know we have not heard too much about the Clarity Act, as now they're going to summer recess.
Exactly. Yeah, hi, Nicole. Great to be back. So, yeah, first of all, Clarity is pretty much dead, we think. I don't think we're going to see any progress there. But it has been nice to see the cryptocurrencies hold up, even though, that news just kind of came out recently. Bitcoin has been doing pretty well in holding this level at around 60 or 65K. It did dip down at the start of August to about 62.5%, but it's bouncing back. It's holding strong. Ethereum has been a bit better for the last month or so. I had looked, as of June 1st, it's up 18%.
Okay, Hertz, cheap calls. Cheap.
ETFs versus Ethereum, about 600 million versus 90. So that's been something to see, even while Ethereum has been on the top pace.
AI, there's been talk that there were margin calls tech. People were allocating funds elsewhere, that they didn't like crypto, or they were elsewhere. But you have Bitcoin sitting around 64,000. What will be the catalyst if it's not the Clarity Act? Because that could have been the catalyst. What are we watching for next in the world of crypto?
That is a fantastic fantastic question, Cole. I think, yeah, for a while there, we were really looking for clarity to have some sort of signal. We didn't think that it was very priced in, which I think was proven when the price again kind of held up, if you will, once it was essentially known that this wasn't going to get done. What's going to pop next? Maybe we could see some issues around inflation. A lot of times, if inflation starts to spike again, people will kind of rotate into Bitcoin, a currency that doesn't have that sort of control over it from the U.S. government or a foreign government. So we could see something like that. Otherwise, I think it could be some more of this product that people are creating. We've seen additional ETFs, additional types of funds around the cryptocurrencies, and I think just continued interest there could help.
Okay, so Hertz cheap 1 DTE calls. They're going for like 15 cents. Hertz, if we can manage to see a bounce in Hertz, they're looking for 20%, so that'd be about $2. Okay, so can we push? We're squeezing right now.
Yeah, that's definitely on the table. Sounds like I think there was a new report even out today that Mauritius is comfortable with a potential increase next month. So we could see that. And I doubt that would be very good for risk assets. So we could see a little bit of a dip with something like that. Anytime the interest rates are going up, you're going to see things like stocks, Bitcoin, and others probably drop a little bit. So that would likely be the result, but we'll, I guess we'll just have to wait and see.
We also had a hiccup in the industry with the gold wallet hack. Talking about that for the last week or so, and that was 130 million drained from accounts. You don't want to see that, right? We've seen this story before. You don't want to see that. It's not a reassuring story. But also, sort of on the headwind side, for the misses, we've seen Circle, Coinbase, Galaxy, Cipher, but in certain areas, can you pick out something here among these things that you gave to my attention? What are your thoughts about what's going on here with these misses?
Yeah, it was definitely a struggle during the Q2 earnings season for most of those stocks that you mentioned. We have seen a lot of them report, and most of them did have some sort of miss, be it a revenue miss. We saw the mining companies struggle specifically. Again, with
Now let's see what breadth looks like here. New York FANG, we definitely got buyers at the low of the day. We're in the upper half of today's range. Would be easy for them to push this down a little bit. Bottom line is we had buyers at the low of the day, sellers at the high of the day. All right, let's look at the 60 minutes, see what that looks like. 60 minutes holding right at the 10 EMA. Sorry for the garbage in the way. Let me go do this. Let me go S&P. Okay, that's good. All right, so New York FANG. Okay, 60 minute. Okay, so you can see the 60 minutes right at the 10 EMA. Need this to turn up, stay above the 20 EMA. So far, everything looks pretty good except for Amazon and Google. Those two are dragging their feet. Everything else has got shorts covering at least at a minimum.
Okay, well, we did have the Circle CEO talking about the blockchain, bigger opportunities, more to come when it comes in the world of crypto. Thank you always for your updates. We really appreciate it. Thank you, friends, for joining me today. Download our Schwab Network app. It's available in the App Store. Tune in 24/7 on schwabnetwork.com. Market on Close is next.
Schwab Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. Investor Checking and get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, your real-time market coverage, expert strategy. Bell. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on ETFs.
Follow the biggest headlines, live analysis, breaking news, trade ideas, minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to logic.
Not insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and online. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could initiative to leave everything behind, literally come across the entire world. I think that we totally met his work. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest in a company that can help me give my family a happy financial future.
S&P. All right, we're trying to make another higher low here. Okay, see if we can't get above VWAP. I bought some calls for tomorrow. Once I posted that in the trading room. Let's see. $44 deltas. That's the 77.25. So we're looking for at least 77.25 by tomorrow. I sold the 41 deltas. I probably should have sold like the 35 or the 45. All is well. It's like risk 200 per contract to make 300 per contract. I wouldn't risk the entire 200. I'd risk maybe $1. So far, this is working pretty well. Okay, so we're working pretty good. We're headed back to VWAP. S&P headed back to VWAP. NVIDIA turning back up.
Exceed estimates by enough to please the street. Many of the sell-side notes mentioning today that investors wanted at a minimum a match to Seagate's report from Western Dig. They didn't get one. The company pinned the discrepancy with its closest competitor in part on short-term fluctuations in pricing and transitions to newer, higher capacity products. Datadog also tumbling double digits after its full-year sales guidance came in below Wall Street estimates. The company says one of the biggest customers is reducing its usage, which is weighing on its outlook. It still posted growth in the second quarter, but that wasn't enough to sway sentiment to the upside. But Ralph Lauren is moving higher today as demand from its affluent customer base helped it beat expectations. The premium apparel company reported strong growth across regions.
All right, looking for NVIDIA to bounce.
Asia jumping 24%. Let's check in with the markets here, see where we stand as we near the end of the trading day here. Holding on to the sea of red, we were more mixed this morning. The S&P down close to 0.1% right now at 77.1787. On the Nasdaq, we're 0.2% lower, 29,430. For the Dow, we're down 3%. 468. The dollar holding under 100 though right now. Gold is at 43.0550 and crude oil at 77.47. That's added about $1 so far. And Bitcoin is at 64,595. It couldn't hold on above those 65,000 mark, but it did get up above there for a bit of the session today. Sam, what is catching your eye over there today? I hope we worked through those tech issues. We are back. Yes, the tech gremlin's gonna love live TV. Yes, so chips rallying despite the sell-off in memory that we've seen. Nvidia has been struggling, but a couple of names that have stuck out to me today include ARM, which has been up over 4%. It came after a profit beat for SoftBank, which of course owns that majority stake. Software has been getting smoked. Marley, you mentioned Datadog. Lovin is also another name that's been down in double digits after mixed earnings and analyst reactions. It's a very volatile stock. We know that. We covered it yesterday. HubSpot, another software name, down big over 20% today. Its biggest one-day drop for the company ever. That's what concerns about guidance and customer demand. You've got Figma also plunging in double digits after earnings, but not a great day for software. I'm also watching rising oil yields and the dollar this afternoon. The markets are digesting somewhat more hawkish Fed commentary in recent days, while also expressing, it seems, some skepticism around the latest negotiations on the Strait of Hormuz, which is why oil is ticking higher. You've also seemingly got some cautious positioning ahead of that jobs report coming in tomorrow. That's keeping equities very much in check here on Wall Street as we approach the close today. But Molly, I'll send things back over to you and Kevin Hinks to sum up today's top movement. Thanks so much, Tanya. Kevin Hinks joining us from the CBOE today to take a look at some of the top movers that we've seen in the markets. We mentioned a few of them there, but before we get to the specific names, Kevin, what are you thinking about the action that we've seen today? When I was doing Trading 360 earlier today, we had a much more mixed picture. Only the Dow was in the red, and then by the time I finished that show at noon Eastern, we were entirely in the red, and now we've just further fallen into negative territory.
Okay, we got a little bit of time to try to close this green on the day. S&P is trying to get above VWAP. It's got a previous level here. Okay.
3%, yeah, over 3%, now 3.1%. That took the dollar with it. That took yields with it. We lost the macro and we lost our upside.
Okay, trying to push through this level. 77.21, 77.25. Strikes. If I start to make a profit on these calls, I'll just take them off before the close. Microsoft trying to break out. Oh shit. Oh shit. Must have been a pretty decent fire back there. I wonder if they get hit by lightning. That would suck. Need to put a lightning rod on the top of my house. I keep thinking about doing that. Got pine trees, about 75-foot tall pine trees all around the house. But I don't know. Lightning strikes always bother me.
The chart of Western Digital, and you can see that expectations were high. And if the numbers don't come in sexy enough, which they didn't, this is what happens to your stock. People lose a little bit of the upside inertia. Looking at the revenue, they guided in line with revenue going forward. The margin
Meta looks okay. Nvidia looks okay. Hoping for more upside, but not getting any kind of momentum energy at the moment. That's okay. I mean, it looks pretty good so far. If we just get a little bit more energy, a little bit more volume coming in. Treasury yields are higher. 30-year is at 5.21%, which is not critical, but it's not good either. All right, we're trying to pop through this area right now, S&P.
We have jobs report, we have some inflation readings, and those reports are to carry even more significance.
Okay, Intel's starting to turn up. Intel looking pretty good here. Intel's trying to break above this level. Okay, we got some pivots here we need to get through.
B50/50s either. It's binary, so that's why it's a battleground.
time in a long time.
Okay, S&P, more interested in Intel, S&P at the moment.
Which is why no matter what happened in the
Okay.
market, it could be deemed a surprise relative to what the market was already, had convinced itself was even possible. So things are a little bit different as that goes.
I think it sort of ties into our view that the market's still in the process of testing the new Fed, Kevin Warsh, because he is trying to rethink communications, forward guidance, and even what inflation is.
Is that what the 30-year sticking at 521, 520? There it is, 521 today.
Yeah, because it may be reflecting on the uncertainty that is created by lack of forward guidance and lack of Fed comms, or it could be the idea that it's inflationary. We actually don't really know what's being priced into the market.
And if I can pivot off that for a second on the credibility conversation, there's a number of, I disagree that Fed is losing credibility. I don't buy that argument. I'm not alone. I know Taurus and Slock recently.
All right, we're trying to go green here. Trying to go green on the day. A little bit higher and we could be good. The lows did get bought, so that's a good sign if we get any kind of follow through tomorrow. So I have some 77.25 calls sold to 7730 for tomorrow, 1 DTE in case we do bounce. Okay, so here we are. Let's see what charm looks like. All right, not too bad. I can see where we closed yesterday.
You guys were just alluding to as well, the market's not used to going into meetings 50-50. Sure. It usually knows.
It should probably get used to it. It should probably get used to it.
The significance of charm is that we tend to close in between these red and purple nodes, right somewhere near the middle. That would be a close near yesterday's close. Or we could do this one up here a little bit higher, which would be good. That would be about 77.35, which would be fine by me. If we get up to 77.30, I have to take the profits off. That'll be maximum profit, 77.25, 77.30 for the S&P 500. We're currently trading 77.20, trying to push a bit higher.
If you exclude the second quarter earnings are up 50% year over year. Excluding investment gains, it's still up 22%. That's a huge step up in organic growth for the.
Okay, we're trying to push a bit higher now.
13% last year, and it is based.
Probably killed your eyes just now.
I think the good news is that some of these are being put at a time when there were energy inflation pressures and tariff headwinds. So I actually think the repeatability is the good story because next year goes anniversary.
Four sectors are up more than the index. A fifth is basically tied. Mid caps at a high, small caps at a high, the UK at a high, Germany and France at a high, Brazil and Mexico almost at highs. There's lots of evidence that this is not just some Fed.
Microsoft trying to push here. Watch Tesla turn the corner. Tesla turning.
Every company in every industry is basically saying we're good.
More conversations to come. We know that, guys. Thanks.
25.30s. Okay, cool.
Today, the lockup expirations now begin in what has been a very big week from earnings to this news today. Our Morgan Brennan, following all of that, joins us now as you see. Hi.
Hey, that's right, Scott. It has been a big week. It's been a long week so far, too. So happy Friday Eve. On Wednesday, post-earnings analysts at JP Morgan wrote, quote, there has already been significant pre-positioning ahead of this first expiration, the largest of many over the next several months. Maybe. As you mentioned, shares are up. They're about 2.6% right now. But this is just the start. Available share count surged more than 140% today, representing 20% of insider shares. But billions more will unlock across multiple tranches into 2027. Bernstein says by January, 50% of shares outstanding will be in free float. The first expirations pertain to some investors and some employees. Senior executives are subject to longer lockups, and then Elon Musk, who owns about 42% overall of SpaceX, can't sell until next June, if he ever does, if history repeats. Keep in mind, because some indexes change methodologies ahead of the SpaceX IPO to enable faster inclusion, a bigger float will mean a bigger weighting, which could mean more buying by funds, and that could be true for the NASDAQ 100, which adjusts
Come on, S&P is just taking forever to do anything. There's just not any momentum here. Got some nice volume to push it back up to VWAP, but not following through. Nvidia, same thing. Microsoft feels like it wants to go, but it keeps getting rejected. Astera Labs, the top of the NASDAQ 100. They had earnings already. They beat by 31 million. 10 cents. They beat by 10 cents. Astera Labs. Once it gets above the 50-day, Astera Labs would be something I'd be interested in. Microsoft.
Now let's bring in Yorkville's Dan Ives. He's with us here. So, are you thinking that at minimum there's just going to be a surge in volatility around this name because of the surge in supply that's going to continue to come on the market? Yeah, no doubt. And I think also the index component.
Microsoft's about to go here. Microsoft about to go.
I think the reality is that this is just the first one of these. I mean, when you think about Anthropic, OpenAI, and others, it's really looking at sort of case study how this all plays out. I think the issue for investors, it's almost a tug of war, because to some extent there's the longer term view, near term the lockup. That's sort of the albatross around the stock.
Can we, following the earnings, can we move away from the conversation about we're unsure what this company truly is or who they really want to be? If you look at the amount of money that they've already spent, and then the money, there's the capex right there. We just had it up on the screen, more than $18 billion in the current quarter. And what we think they're going to continue to spend, this is a hyperscaler, isn't it?
Oh, I mean, I don't think there's any doubt that's what they want to be. And to some extent, when you look at what they're building, the CapEx arms race that you see playing out is how do you catch up to Anthropic? How do you catch up to OpenAI? Look what's happening across big tech. I think the issue for investors, and we've talked about it on the hyperscaler side as well, is you're focused on the longer term, but in the near term, patience is required. And I think for any of these companies, that continues to sort of be that quagmire. The longer term vision, that's what they have to build to.
And are you telling investors today to buy it now with the belief that they can be that? They can be an OpenAI, they can be an Anthropic, and maybe in Elon Musk's mind, they can be bigger and better than they are.
I think for investors, anyone in space like you're betting on Musk. You're betting on the longer term vision. Now, when it comes to what you see in terms of the lockup, that's something that's just a pure reality that you cannot sort of talk that away. I think it's really, this is almost becoming a case study because investors want to see not just how this navigates next few weeks, but over the coming months. Because when you think about what's behind, will investors, what will they ultimately say?
All right, Microsoft trying to go here. Got an ABCD pattern. Okay, looks good. Looking for another move to the upside.
Monetization now is starting. What that means is shot clock's on. They know time's run out. And if you ultimately take foot off the pedal when it comes to CapEx, you can find yourself way further behind.
What about these other levers that they have to pull? You know, Starlink Mobile, for example, which they talked about on the call. You know, some of their traditional wireless providers shuttering a little bit as to what.
Okay, we're looking for an ABCD pattern, looking for Microsoft to break out. Be nice. I don't see it happening today, but it'd be nice.
Market, but I think it just speaks to you're going to see it in space. We're seeing
SK Hynix, no movement there. Intel just stuck at this level.
$1 trillion in reps by 2030. Is it realistic?
I think it all comes down to the space AI story. I think this now takes it to much more the data story, the AI story. That's ultimately what they need to achieve. And that's not going to build their data. Not going to happen.
So Dan Ives, I think he left Wedbush, right? He went out on his own, or he's working with somebody else. Okay, SpaceX lockout expiring. It's pushing a bit higher now. So not the drawdown that everybody was expecting. SpaceX. I have a pretty. Do I want to add the SpaceX?
It's down about 12%. This is a hard drive maker. The quarter beat, but its profit margin guidance came in below rival Seagate, and that's important. Its shipment growth also slowed, and that was enough to knock the stock down. SanDisk is a flash memory maker, so put it into the NAND memory category. It has a similar problem, so record revenue, but a guide just for roughly flat margins and only modest price hikes when investors really wanted a knockout. That seems to be the theme across the board. Expectations are so high. SanDisk did say it had more visibility with customer contracts, though. Still, some analysts think SanDisk is lowballing, and its investor day next week could reset sentiment. This isn't, though, just about two stocks. These are momentum names. When they break, they tend to drag for example, the momentum ETF down with them. Micron was lower, did bounce back, but just barely in the green right now. And speaking of bouncing back, money coming out of memory may be flowing straight into NVIDIA, up roughly, 13% just in the past week or so. So we're seeing a little bit of that rotation out of momentum.
NVIDIA. So thank you. The software stocks, they're also losing some ground today after a wave of weak earnings results. Seema Modi tracking those moves for us. Joins us now. What do you see?
Scott, Datadog was a big surprise. It's been seen as a leader in the data infrastructure space, earnings beat, but focus on the earnings call quickly turned to a reduction in usage by its biggest customer, OpenAI. Now, to reassure investors, executives shared that a renewed
Datadog's down. Wow, 19%. Jeez.
Investors sort of using it as a reason to sell after what has been an impressive run for Datadog shares this year. Elsewhere, software companies HubSpot and Figma cutting their revenue outlook, amplifying those AI displacement concerns. Stocks are responding down double-digit percentage points at this hour, and AppLovin delivering weaker sales growth than analysts had anticipated. This as its direct competitor Unity Software really killed it on earnings thanks to a big jump in subscriber growth. That stock actually higher by 17% right now, Scott.
Thank you very much for that. That's Modi shares of Honeywell Aerospace getting crushed today. Let's get to Phil LeBeau, who has more on this big move. What's happening here, Phil?
Scott, you want to see an ugly chart? Take a look at Honeywell Aerospace today. The company reported its results for the second quarter after the bell yesterday. And boy, did they have some bad guidance. And that guidance is the reason why.
Oh, wow. $23.
3% so far today.
23%, $48. Wow. All right, more reason to reduce your risk because some of these stocks are not following through, especially if guidance is bad.
2026 sales guidance cut to plus 4 to 5%. Organic from originally up 7 to 9%. Adjusted EBIT being cut down by 6%. Jim Courier, the CEO of Honeywell Aerospace, says that there are supply chain issues that will be weighing on full year results. The interesting thing is you take a look at this stock since the spinoff at the end of June. Jim Courier has been on our air 3 times, and we reached out to him again today to say, what's changed? But he's been on our air 3 times, Scott, since June 11th, when they had their investor day pre-spinoff. Not once did he ever hint at major storm clouds like cutting the guidance by this much. Yeah, there have been some supplier issues, but this has certainly caught investors and analysts by surprise, to say the least.
Yeah, which they never like. And your points are very well made. Phil, thanks. Phil LeBeau. Pair of food stocks, meantime, getting slammed today. Brandon Gomez joins us now with more on those. What do you see on your beat?
Hey there, Scott. Yeah, Papa John's cratering after the pizza chain cut its full-year outlook, suspended its quarterly dividend, and said its turnaround is taking longer than earlier expected. North American same-store sales fell more than 8% in the quarter on softer demand and intense discounting. Revenue declined nearly 9%, and management expects sales to keep weakening. Now, the company's CEO saying it is no longer pursuing a sale, focusing instead on its turnaround strategy. Now, let's stick with the restaurant sector. Shake Shack giving back some of yesterday's gains after reports that Starboard Value had taken a stake in the company. Mizuho today raised its price target to $90 from $80, saying Jeff Smith's involvement could unlock additional value by slowing company-owned units.
Mizuho raising its price target to $90.
Earlier with you, I heard say its It's too small a market cap for the size of Shake Shack's global brand, but there need to be operational changes.
Inside day.
Has executed elsewhere, and we'll see if they can do again here.
SpaceX looking for a follow through.
Here, post 9 on closing.
Okay, Apple is starting to move here. Apple's starting to move end of day. Watching Microsoft. Microsoft looking good. Microsoft. Microsoft starting to move. Apple is starting to move. Okay, Microsoft looking good. Watch Microsoft here. Strength. Okay, looks good.
This quarter might be a little bit different. NVIDIA's valuation has continued to trickle down over the last 12 months. Today, it trades at about 20 times next 12 months earnings. That compares a year ago to about 30 times. So that valuation declining, I think, implies lower expectations going forward. So I think it's plausible that another beat and raise quarter might actually get a positive reaction this time where it hasn't in the recent past.
Yeah, I was dollar for everybody. At times, somebody said the valuation is cheap at this point. Does the circular financing concern you at all? And I'm just wondering if I could add to that. Why do you think we've seen almost this decoupling with NVIDIA and kind of the rest of the chip space, where it's not always moving in tandem with the momentum trade?
Yeah, two good questions. So I mentioned earlier that second quarter period where semiconductor stocks doubled. The SOX index of the 45 or so semiconductor companies doubled. NVIDIA was the worst performer out of those 45 companies in that massive rally. And then the month of July, where the whole semiconductor group pulled back, NVIDIA was the best performer. It now basically is like the safe, dependable, defensive semiconductor company. I know that's kind of an oxymoron, but I think that's the condition that we've reached. NVIDIA's, their business prospects are so good, their balance sheet is debt free, they're generating humongous amounts of cash, more than they really know what to do with. And so I think it's kind of got that defensive, conservative choice amongst the semiconductor group. And then your question about the circular financing, I think that is probably the most credible investor concern about NVIDIA. It is undertaking a lot of activities, guaranteeing revenue levels, helping to guarantee financing, even taking equity stakes in their customers, all to grow the ecosystem, seed the ecosystem, keep market share from aggregating too heavily in the big cloud.
Okay, ABCD pattern, Microsoft.
And that makes investors nervous. It harkens back to the late 90s, telco behavior. But I think one big difference is NVIDIA's business is generating now, about $200 billion of free cash flow. They have no debt.
Microsoft starting to move. End of the day.
Free cash flow to investors in either
Okay, we got 30 minutes.
So don't lose sight of the fact that, yes, they are doing a lot of financing their customers' purchases, but they are also returning a fair amount of capital to shareholders, and they're keeping their balance sheet debt free.
And so, Jed, as we look at NVIDIA and their results and your expectation that because they pulled back some, perhaps we could see them move higher. If that happens, and we've had earning estimates continuing to move higher, just sort of generally.
Yeah, I thought S&P would too.
Does that suggest then that we might be looking at another leg higher overall for the AI leaders? And does that hinge on NVIDIA's performance?
Yeah, a lot does hinge on NVIDIA's performance. NVIDIA is now 7.5% of the S&P 500 index. So it is the largest company in the world. And, numbers 2 through 10, about half of those are really big customers of NVIDIA. So yes, the AI trade is the dominant thing driving markets up or down in any given day. I think so long as NVIDIA's biggest customers, those 4 I mentioned, so long as they're earning good returns on the purchases of NVIDIA products as they have been and as they are today, they will continue to buy and to buy more.
All right, here goes Microsoft. Microsoft on the move.
Per year. So yes, I think the AI
Volume, Microsoft volume.
I think the returns on all this CapEx spending are positive, about 20% pre-tax ROI if you generalize across the group. And I think we're going to see another big spending increase.
Okay, let's see what I'm going to do with Microsoft. I want to take some profits off into strength, Microsoft. Let's see, Microsoft. Okay. Take some profits off of Microsoft. August 500s. Okay, I should take these off, right? Should take these off. August 500s. Microsoft. I thought we'd get more movement out of the S&P 500. I guess not. Broadcom pulling back in. Microsoft looking good. Nvidia looking for some upside. No. No. Nice volume on Microsoft. Okay, looking for good. Looking for a good.
Opportunities don't stop.
Good follow through, Microsoft.
Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists. Understand the ins and outs of 24 hours. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marla Kane alongside Sam Bottis in New York. Shares of Rocket Labs are on the move higher after successfully launching its
Okay, Microsoft looks good.
for Kyushu Pioneers of Space. The mission was Rocket Lab's 8th launch for IQPS and to deploy its constellation over a total of 15 launches. We had some great B-roll there for you to see the actual launch themselves. Rocket Lab there you can see up close to 2%. SpaceX up 3%, a much needed boost, but still only trading at 111.80. AST Space Mobile is lower on the day, while Planet Labs is moving higher, up more than 2%. I do want to bring Sam back into the conversation, though, and welcome in our next guest. Joining us, Kyle Brown, the CEO of Trinity Capital. Kyle, really appreciate you taking the time to join us following your earnings report. I was just looking over your...
Okay, ABCD pattern looking pretty good on Microsoft. Seems to have the most momentum right now. Microsoft. Apple grinding higher. Apple.
Turn to lenders like Trinity more than ever.
Okay, pre-market high is still much higher here. Opening range high. Looked pretty good this morning. First hour, last hour, as Corey was mentioning, seems to be the time.
We're seeing a ton of activity in space, frontier tech, AI, et cetera, and really all of that late stage VC, pre-IPO, lower middle market. And we have just dug out a great niche in that area. And we see a lot of companies growing.
Apple looking good. Microsoft is moving. Apple's above the 50-day. Okay, Microsoft looking good here. Microsoft. ABCD pattern. Nice volume end of day. Microsoft. What is Palantir doing? Palantir. Okay, Doji. at the 200 day. We need a bounce. Palantir. Okay, we got 25 minutes to go. I'm your host, Cousin Vinny, coming to you from closingprint.com. It is Thursday, August the 6th.
We have been financing GPUs structure for 4 to 5 years now, which believe it or not, in the AI world, we're OGs in that space now. But we have solved a lot of problems there. We have figured out power. We have access to space. We can access chips and build GPUs and release them directly to lower middle market customers who want 1 to 5 megawatts of compute. And so I think we have, the story is big and it's really focused on hyperscalers, but there's this developing story of lower middle market companies that want their proprietary tools and AI on their own.
S&P, I guess we'll have to wait until tomorrow. S&P, have to wait until tomorrow. I thought we'd be a little bit higher here.
Et cetera. And so it's a great niche. It's booming.
Kyle, investors have been waiting for some sign that these higher rates results, you have less than 1% of your portfolio on non-accrual. What is that telling you about that?
All right, SK Hynix trying to turn up. SK Hynix, end of day. We got SpaceX starting to move. SpaceX. SpaceX trying to turn.
You see a lot of turnover, so we're investing into new companies. This is not small legacy portfolio that we're just bumping up and supporting. These are mostly new investments that we're making. I haven't seen credit quality really decrease in private credit, whether it's lower market or medium.
SpaceX looks good.
Yeah, private credit, it expanded greatly for the last 4 or 5 years because they had access to 2 to 3% bonds. And rates went up.
SpaceX.
Rates have come down. And now all of those bonds have to be refinanced at 6 to 7%, increasing the cost.
So it didn't drop like everybody thought it would. SpaceX didn't fall like everybody thought it would.
Up 32%. How sustainable is that throughout the rest of 2026?
Yeah, we feel really good about sustaining that type of growth for the rest of this year and into next year. We have over $1 billion in signed term sheets, committed capital right now, and so we have line of sight for the next couple of quarters on continuing that growth. It's a great time to build a company in the U.S. right now. Innovation is booming. There's a significant amount of capital that's already ready to be decided to invest into technology. And
All right, 21 minutes, 30 seconds to go. All right, starting to move a bit higher. SpaceX.
Discussion about the private markets becoming more competitive right now as people are trying to gain access to a lot of these pre-IPO companies. Are you seeing underwriting standards get any looser as the competition thickens, or has discipline remained pretty much intact?
We're actually a little bit different ever since software. We're actually in a time where there's been a lack of liquidity, certainly upstream, where there's already a significant amount of capital raised. That maybe doesn't exist, but for the rest of the market, actually, there's a little bit of a capital constraint happening right now, that lack of liquidity. And back to what I said before, and companies really have to focus in on refinancing bonds that they raised during the zero interest rate period. And so we've actually seen quite the opposite. Maybe a little bit less competition, spreads increasing a little bit, more opportunities for warrants and upside. And I would say this has been
options with high quality companies that we've seen in years as a result of it.
Very interesting. I see Trinity has 200 more positions across their portfolio of companies. Kyle, really appreciate you taking the time to be with us to walk through those results and also the trends that you're seeing in the space. Kyle Brown, CEO of Trinity Capital. Coming up next, we've got Options Corner. Victor Kent will be joining me right here in the studio to take a look at the activity in Twilio ahead of earnings after the close. That's next.
Same goes for where you invest. Smart with Schwab.
Have you ever watched an interview and thought, I understand or I want to know how they discovered that you do? That's exactly where market matters comes in. I'm Carly Hayden, and slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the local economy. If you want the full story, not just the headlines, market matters is for you. Subscribe wherever you get your podcasts.
Last year, my dad had a stroke. Big shock. To see this person that I was for some family. One of them. Stroke. Yes. Now we're in the market. Daily, I started to realize when I pick up with my dad, he's been with Schwab for a long time. Jim, and then growing that 20 years. Jim's really been there to answer any questions I ever have. Makes a huge difference. That actually cares.
I track options for you. Everybody just